and welcome to Chapter 2. So, Chapter 2 is a long chapter. Chapter 3 is going to be longer. After that, it's going to get easier. So if you can bear with me through the first couple of days, this week is going to be quite heavy because we're going to give you a lot of information so we can get into the practice of actually putting numbers into a tax return. I promise that part of it will be fun, but to get there, we've got a lot to go through. So some of these slides I'm going to go through very quickly because the information is in your textbook and it's not difficult to understand. Of course, if you have questions, you have the chat window. You can email me. I will make myself available during breaks and after class, but I'm going to focus and spend a little bit more time on a few of the things that I think you might need a little more practice or in-depth experience with. So first of all, welcome back. I hope everyone had a really wonderful weekend. Quick reminder, please participate as much as you can, but be respectful when you do. Be kind to your other students. And of course, respect class times. We're going to be having breaks today. They'll probably be short breaks today. So make sure you're back right on time because we're not going to be able to go back and review things. As I say, this is going to be a fairly heavy class. I think I have about 6 pages of notes that I want to get through today. So I won't even tell you how many slides. It'll be a surprise. So we're going to move fairly quickly. What we're going to do today is we're going to start with the first 2 pages of the tax return. When we get those 2 pages done, we're going to take a quick break. Then we're going to start filling in the actual numbers on the tax return. So we're doing information pages first, then we're doing some numbers. We're going to put some income in. We're going to talk about the most common type of income we see on most of the tax returns that we would call a level 1 or a basic return, which means income from employment. And then we're going to talk about some of the deductions that are related to that. So we'll be talking about how to get a net income figure and how to get a taxable income figure. Okay. At the end of this, you're going to know how to complete. When I say complete, of course, we're going to go back and fill in lots of details on lots of different lines, but you'll be able to get all the way to the part of the return where you can get a taxable income figure. And we're going to talk about some of the types of employment income that don't show up on tax slips and how to put that income onto a tax return. Okay, we're going to spend a little bit of time on wage loss replacement plans, mostly because I find for a lot of people who are new to the tax system in Canada, or even relatively new to employment in Canada, this isn't something that is comfortable or familiar, so I want to make sure we're solid on that. We're going to speak very quickly about research grants as a source of income that's considered a type of employment income, and we're going to talk about RPPs, I'll explain that when we get to it, registered pension plans, and what happens with contributions to those on the tax return. We're going to talk about union dues. We're going to talk about some employment income repayments. We're going to talk about something called security options deductions. We're going to talk about Canadian Forces deductions. And again, we're going to make sure we can get to the end of the taxable income section. If I'm saying a bunch of words you don't know, I shouldn't be because I'm sure you've all read your homework. But if there's terms that are confusing to you, we'll explain them in more detail as we get to them. So let's jump into the very first page. Now, I'm going to have this on my screen. Let me know if it's fuzzy or if it's too difficult to read. We hope that it's blown up large enough, but if it's not, I can switch to a tax return. This is a good place for you to go in and find a copy of a tax return. And Brittany says, looks good. Thank you, Brittany. Can anyone in the chat window remind me what are the different sources you have other than what's on the screen right now to find your own copy of a T1 return? Fillable forms. Wonderful. If you're looking for it in fillable forms, you need to know the form number to find it, which might be difficult. So I will say for anyone using fillable forms, if you're finding it difficult, you can just open them all until you find the one that looks right. Or in the textbook, there are copies in each of the chapters that introduce these. At the bottom of every CRA form on the left side, there will be a form number. So anyone who's looking at a fillable form for the income tax and benefit return, you should see that it's a 5000-R form. You don't need to memorize the forms, you just need to know how to find them. If you can't find it in the fillable forms, or if for some reason the fillable forms are broken, you can't access them, where can you go to get a tax return, a T1 tax package general return fillable form from the CRA website. Excellent. So that would be your next resource. And then the third resource that a lot of people forget about, we have a reference guide in Inkling. So if you have Inkling, you can go to the tax reference book, and you can also find a copy of most of the forms you need, sort of at least the general ones you need for a tax return will be listed there. So what happens on the first page is we need the taxpayer's information. And you may remember we discussed very, very briefly last class that tax returns in Canada are always filed by the individual. So there are some countries where you file as a family unit, or you can choose to file as a married couple. In Canada, that's not an option. Everyone files their own tax return in Canada. The first page tells us whose tax return we're filing. It's very important that this must be filled out correctly, because it has to match the records the CRA has, or they won't be able to accept the return. So you're going to have a first name and a last name and a social insurance number, the most critical things. We will talk more about social insurance numbers in a little bit. Then you're going to have their mailing address, which might not necessarily be where they live. Can you think of a reason why you might have a different mailing address than your current residence on a tax return? Students, 100%. And PO boxes is the next one we see all the time in Manitoba. So students may not want to have their tax returns going to their temporary lodgings because they don't know where they're going to be living in the next 9 months. They might be moving, they might move multiple times. I know there was a period where I think I moved 9 times in 8 years. And so for those years, I kept my mailing address at my parents' house. And so for my CRA records, I wanted everything going to a mailbox that I could guarantee. Cool Winter's having some difficulty seeing. I'm going to ask Nancy to see if they can help with that. Hopefully everyone else is seeing what I need. Candace is having troubles too. Okay. And a few people are working. So for the people who aren't able to see, worst case scenario, you might have to log out and log back in again. Okay, if it's not everyone, then it's probably individuals. So my best bet is if it's just not working on your computer right now, just exit the session and come back in really, really quickly. Okay. So mailing address doesn't have to match your physical address or your tax residence. Kenny asked, is this form in the textbook or do you need to search for it on the internet? It is not in the textbook. It is in the tax reference guide, but I recommend finding it on the CRA website because I find it the most reliable source of finding your tax forms in a fillable format so that you can type in the answers that you need, because we're going to be using these forms for our exercises and our assignments, chapter review problems, and all of those things. So you can find the forms in ULearn in the forms package, or CRA website. If you type in tax package 2021, you will be able to find the income tax. And Candace is now in. You can see that's great. Okay, now we have one more section on here that I do want to talk about, which is the email address. If you put an email address on this line, what happens? If you enter an email address on the first page of the tax return, what is the client voluntarily doing? What are they signing up for? They are signing up for online notifications and they are opting out of paper. So what will happen if your client enters an email address there and they are not signed up for My Account? Will they be able to access their notice of assessment? Will they have access to it? No. They will not be able to get that until they sign up for My Account. So it's very important you only put the email address on this line if that is what they want you to do. And you need to tell them, as soon as I do that, you're not going to get paper ones anymore. You have to sign in to get your CRA mail. So it's very, very important. You want to make sure. This is more important, I would say, if we're taking an advanced course. You might have a newcomer to Canada where they don't have a CRA account and they can't get one until after they've received their first notice of assessment, that can create some headaches for your clients. So you want to make sure that you understand just because you have a piece of information doesn't mean it goes on the tax return in all cases. When you put information on a tax return, usually you're doing something with that information. You're sending that to the CRA for a reason. Make sure that your client actually wants you to do that. All right, and moving over to the right, we have their date of birth. That's for identity reasons. Date of birth usually is not a problem, but it is used to verify their ID. I definitely have had the occasional case where I've had a client, especially a much older senior client, who maybe doesn't always get their date of birth right. And I had a client who came in and we asked for her ID. We verified she was who she said she was. We put all of her information in, put in the date of birth that she gave us, and then her return didn't file and it said the date of birth didn't match. And that's because the CRA had a different date of birth than she thought she was. And we actually had to go back and get some records to make sure that we had the right date of birth before we could file her return. In her case, she had shaved a few years off her age for whatever reason, and then forgotten that that wasn't her legal age. And we did have to get that corrected for her. All right, what happens if you enter a date that says that they are a deceased person? If you put a date in that area of the tax return, what are you telling the CRA? You're telling them that that person died. If you have a client who is receiving government benefits, maybe they're receiving old age security, maybe they're receiving Canada Pension Plan, maybe they're receiving Canada Child Benefit, what will happen if you enter a date that says they're deceased to all of their benefits? All payments will stop until it can be fixed. It can be fixed, but it's actually quite difficult to prove to the CRA that you're alive once they get the idea that you're not. It can get sorted out, but it might take some time, and that can be difficult for your clients to have their income sources cut off for a period of time while it's getting sorted out. So again, we're not going to cover people who've passed away in this course. It's not going to be something we do. You are never in this course going to put a date in there. And when you're doing it in real life, make sure you're not entering information you shouldn't be entering. The CRA isn't supposed to take that information until they have proof that they have a death certificate. But remember, we're not necessarily dealing with people. We might be dealing with computer programs. And once something gets into a computer system, it can be really difficult to get it fixed. So just going back in the chat here, Brittany, you had a grandmother who had it every year because the hospital got the date wrong. And she wanted the real date, not the one that the hospital put on her records. Yep, fixing things in the world of computers can be a little complicated. So we want to be very careful, especially when we're dealing with other people's information. We want to be very careful to make sure we're being accurate. If you mess up your own tax return, that's something that you can sort out. But if you make a mistake on somebody else's tax return, that's something that you really want to try not to do. All right, and then we have a box here for marital status. We're going to talk a lot more about marital status in the future. We're going to talk about how to know who's married, who's common law, what separated for tax purposes means, what single for tax purposes means. For this part of the course, we're going to tell you, but in real life, of course, you have to determine that when your clients sit down in front of you, and they might not even know the right answer because the rules for taxes might be different than legal rules for other purposes. So we'll talk about that. For now, we're going to tell you married, common law, widowed, divorced, separated, single. Can anyone tell me why it matters? Why do we need to know that someone is married or single on a tax return? If we're filing individual tax returns, why do we care? This was touched on briefly in Chapter 1, but really, really briefly. So if you don't know the answer, that's all right. Some credits are family income dependent. That's correct. So we have benefits and we have credits. So refundable credits and we have tax benefits. And many, many things on the tax return depend on the family income and not on the individual's income. So we need to know if you have a family before we can calculate any of those credits. So the income page is where we make that determination. It will link your return to someone else's return so that the CRA can calculate any benefits that are based on family income. Great. And then the last thing we have is language of correspondence. You can pick English or French. Whichever of those two you pick is the language that the CRA will use to communicate you for the next year. What if someone says single but they're really divorced? That happens all the time. Remember that question. Ask me that when we get to the chapter on spouses and family situations, because it does come up there. If you say single and you're actually married or common law, that's a bigger problem than if you say single and you're actually divorced. So we'll talk about all of that when we get into the difficult stuff. And probably, I think that's chapter 8, 9, or 10, somewhere in there. All right, so we've talked about signing up for online mail. You will get emails from the CRA, but in this day and age, it's really hard to know when you have an email from the CRA if it is correct or not correct, if it's spam or fraud. So you do have to make sure both you are aware of this, and if you are assisting other people and you're signing them up for online mail, it's always important to make sure that they know what they're getting as well. So always send emails in both. They will send emails in both official languages. Everything will be English and French. There will never be a link in a CRA email. A CRA email will just be an information email that says, you have information in my account, go find it there. And then you will personally go to the CRA either by phoning them directly or by going to my account, or represent a client if you're in an office and looking for the mail that way. Okay. Anything that is not all of that is definitely a fake email. And if you do find that there is a fake email, the CRA would be very happy if you would report it to the anti-fraud center so that they can try to track down the person who is doing that and stop them. Of course, it's really hard to do. Many people are out of the country, and a lot of these fraudulent scam things will show up all the time. Brittany asked a question, what's the liability to prepare if the individual provides us with the incorrect information? We have some obligations to verify our clients' IDs, so we have to make sure that we're confident that the person in front of us who is asking to file a tax return is actually that person. We can get in trouble if we haven't been reasonably careful in checking IDs. But if they give us fake or incorrect information and it's not something that we could have obviously dealt with by, for example, checking a driver's license or photo ID, then we have to take the information that we have. So we are protected, but it is our obligation to do our best efforts. Most of what we do is just making sure we're asking a lot of questions and verifying that people are giving us the right information. But of course, there's no system is perfect. The other thing I will say, if you are preparing taxes for people, it's very stressful. It's always a concern you might make a mistake. The reality is you're going to make a mistake. There is no one who makes it through a tax season without making at least one mistake. Mistakes can almost always be fixed. So the important thing is for preparing returns for other people is take responsibility. If you have made a mistake, tell the client, say, I'm really sorry, this is the thing that happened, and this is what we're going to do to resolve this for you. All right, we're going to do a little exercise here because I've been talking for a bit. So I'm going to show you a sample email, and I'm going to pull up the annotation tools and allow everyone to mark on here, draw for me some of the signs that this might not be a real email from the CRA. So what hints do you have that this email might not be accurate? All right, we've got an arrow saying it's promising an Interact transfer. We've got an unusual extension, so it's ntr.do, so that doesn't sound like anything that's coming from Canada. Your email browser has warned you it's possible spam. Your email address looks a bit strange. And I agree. I think the big one is the Interact transfer. The CRA will never, ever do an Interact transfer into your account. So if the CRA says, I have money for you, I want to do an e-transfer, they don't have money for you. All they're trying to do is get you to put your banking information in because that's not the CRA and they're trying to steal it from you. But definitely there are a few other things here. You can tell clients be aware of things like incorrect spelling. Oh, excellent. Someone noticed that they gave you an amount. The CRA will never give dollar figures. Oh, that was Nancy. Nancy's helping us out. CRA will never give you a dollar figure in an email. It's not secure. They will tell you there's information and ask you to log into a secure place in order to get it because you can't get into my account without verifying your ID and you can't talk to them on the phone without verifying your ID. So they won't give you any numbers ever. Excellent. Has anyone in this class, you can give, let's use our participants window here. Has anyone in this class gotten either a spam email or a spam phone call from the CRA? And put a green check mark if it's yes and a red X if it's no. Let's see how common this is. Okay, we've got one no, a couple of no's, a couple of yeses. Yeah, there's a few. There's a mix. If you haven't had one, you're probably going to get one. My favorite one that I got was when I was working in a CRA and in an H&R Block office. So I picked the phone and I said, "Good morning, H&R Block, how can I help you?" And the person on the phone said, "I'm calling about your tax return. There are police on their way to arrest you." And I'm thinking, which tax return? We deal with a lot of tax returns here. Obviously, that was not a real person. They were just calling numbers, and somehow they got an office number when they were trying to reach an individual. Nancy's husband got a real CRA call. I'm guessing on that call, they did not ask for personal information because they won't ask for personal information. They'll tell you what they want, and then they'll tell you how to contact them. All right, but it is common, Nancy, to remind him to file his GST returns. Yep, they will remind you if you need to file things. They'll usually send you multiple letters first, and then if that doesn't happen, they might contact you. Oh, and Candace says that happened to you when you worked at Goulet. Yeah, we get a lot of phone calls from spammers trying to reach out to anyone. So if you get a phone call from the CRA, they won't ask for your personal information. And if you get an email from the CRA, they'll never, ever have a link in it. If you do have a client who's gotten one of these and they're concerned, they might get one saying you owe a lot of money and the police are on their way. That's always spam. The CRA does not send the police door to door to collect tax returns from people. But you can always reassure your client by showing them how to log in. And if they have clicked on something they shouldn't have clicked on, give them that anti-fraud number that was on the previous screen. You're going to get copies of the slides so you'll have it. And then just tell them not to put any other information out there and maybe do some credit report checks as well. All right, let's keep going. So we talked about the first part of the tax return, which is the information about the taxpayer that we need to start with. This is the bottom half of the first page. Now, I will say get somewhat comfortable with this page, but not too comfortable. The tax return does change occasionally between years, so you may find it will look different in future years, but the information we're putting on it will always be the same. So if the formatting has changed, you're still going to be looking for the same kind of categories of information. So the next thing, after we've said who the taxpayer is and whether or not they're married, is their residence information. And for this, we need their province or territory of residence. And I'm sure everyone remembers what is the #1 test we have to ask a client when we're determining their province of residence. So all the way back to Chapter 1, what are we going to ask them about? Type it in the chat window if you have an answer. Where they live. We're going to ask what their dwelling is. So residential ties is what we are looking for. We want their dwelling first, and then we do everything we did last class. I'm not going to review it unless you have questions. We're going to get to practice that when we get to moving expenses. Once we enter their province or territory of residence, what does that tell the CRA? What will the CRA be looking for when we add a province or territory of residence on this line? We're filing a federal return. This is a federal form. They're going to want to know what provincial tax rates are going to be connected to this form. So if you put Manitoba as the province or territory of residence on that line, the CRA is going to want to see Manitoba forms. And remember, this might be different than their mailing address. It can be different. The mailing address can be anywhere. It doesn't even have to be in the country. It's harder to do if it's not in the country because of our tax software. The CRA kind of assumes you're going to put a Canadian address in, but it is possible to put any address in for mailing. But here is where we're going to tell them what tax forms we're going to be using, what provincial forms. So every Manitoba form is going to start with an MB. And then the next two lines we're not going to use in this course. So those are beyond the scope of this course. If you have a current province, if it's different than your mailing address, that line is generally used when we're dealing with something called deemed residents. So we don't need to worry about that. It's beyond the scope of this course. We're just going to deal with people who are actually in Canada. And of course, if you're self-employed, you might need extra forms if your business is in a different province than the one you're living in. And so that's covered in a later course as well. So for this class, you absolutely must have a proper province of territory of residence on December 31st. You have to fill that in because if you don't fill it in, the CRA doesn't know what provincial tax rate to calculate. And everything else in that section you're going to leave blank. Similarly, on the right side, if you have come into the country and established residential ties midway through the year, you would enter the date there. If you've left the country, you would enter the date below it. That's beyond the scope of this course. So for this course, you should not be entering anything in those. There are special tax rules for people coming into the country mid-year and people leaving the country. And so you really do need some specialized knowledge before you handle those returns. All I'm going to say is don't put a date there if there isn't supposed to be one, because again, it's not a good idea to tell the CRA someone's left the country when they haven't. And they get very confused if you say they've come into the country and the CRA thought they were already here. I've had that happen to people who ended up being my clients, where they've had someone who didn't know what they were doing filling numbers in on a tax return, and it's messed up their child benefits and all kinds of other government benefits, and it can be a bit of a pain to sort out. So again, only put information on the return if it is relevant to the client sitting in front of you. For this course, we're not going to do people coming into the country. We're not going to do people going out of the country. Good. And at the very bottom, you need your spouse or common law partner's information. If you are married or common law, you must fill this in. If you are single, widowed, separated, or divorced, you don't need to fill this in. Okay? With possibly one exception, which we'll talk about later in the course, but generally speaking, as soon as you tick married or common law in the top corner of the first page, you must include a spouse. They're not going to ask for their last name because they don't need it. They will have that person's records connected to their SIN number. You do need their SIN number. SIN number is important. So they just want the first name to verify you didn't make a mistake with the SIN number. And you put their social insurance number, and then you're going to tick the box if they were self-employed. What changes for you if your spouse is self-employed? What changes to your filing deadline? It changes to June 15th. So if you don't have self-employed income, but your spouse does, you have a later date. That's why they need to know. And we did have a question from Bo. What happens if they're non-resident? Doesn't matter for this part of the tax return. We'll talk about non-resident spouses very briefly when we get to the chapter on spouses, but you still need their information. Obviously, you can't put a SIN number if they're not resident. So then you just put their name, and there are other pieces of data that we send to the CRA about non-resident spouses. Okay, and then you need their net income because it is used to claim certain credits. So if their net income is 0, you're going to put 0. If their net income is anything else, you're going to put something else. How do you get someone's net income if you haven't done their tax return? If they had their tax return done already somewhere else, what will you do to get their net income? We have clients where one person will come in and file with us and somebody else will go file somewhere else. And Helene has the right idea. You ask them. Ask them for their net income. If they've already filed their return, you get a copy of their return, or just ask for the line number that you want off their tax return. If they haven't already filed their return, you might have to do a little manual calculation. So you're going to ask for enough information from them to get a reasonably accurate answer. Most of the time, we'll talk about this later, we do try to do married and common law couples together because there are a lot of options that we have when we're working with two people. We can choose in some cases what's going to go on whose return, and those decisions can result in a better tax return for the whole family. So we do try to do married couples and common law spouses jointly in our system, and I'm going to teach you that. Of course, they're both separate tax returns as far as the CRA is concerned, but we try to do couples together because we can do better results for them than doing them separately and not making those decisions. But not everyone wants to have their finances joint, and that's an option that they have. It just ties our hands a little bit for what we can put on the tax return. There are two other lines here, amount of UCCB received and amount of UCCB repaid. We'll talk about that later. It's not really relevant today. You will understand how to do that later on in the course. Okay, that's the first page. Any questions about the first page of the tax return? Mostly, be as accurate as you can. Don't put data in boxes where you don't have data to go. All right, let's keep going because we do have a lot more to do. All right, we're going to do a quick activity. Now, I'm not actually going to do this because we're going to do it kind of in a different way. I don't want you putting this in the chat window because it is your personal information, and I'd like to keep that private as well. So do not type in your chat window, but if you don't mind, you are welcome to annotate and just type in a number or draw in a number of the first digit of your SIN, just to see what we have in the class. I can do mine as well. Oh, we've got an option there. We've got some 6s, we've got some 9s, we've got some 4s. Good, and then if you want to, I want you to tell me what province you're from, or if you're not from a province, what country are you from? So you can type using the type function, or you can draw. We've got a bunch of Manitobas. We've got an Ontario. Good, so you're going to start noticing a pattern with SIN numbers now. I'm going to put a little asterisk on that. I would say every year except for the last 2, you'll notice a pattern. What happened in the last 2 years that's messing up this pattern a little bit is a lot of CRA associates started working from home because of the pandemic. And what's been happening is people who think that they're registering for their SIN numbers in a particular province are actually being registered by someone who's physically in a different province. So we're going to find for a couple of years that this doesn't hold true as closely as possible. But for most people, the first digit of their SIN number says where their SIN number was registered. And usually that's either where you're born, or if you are a newcomer to Canada, it's where you moved to when you became a permanent resident in Canada. Okay, so let's talk about what the digits are supposed to be. See if I can get my slides to move here. So generally speaking, SIN numbers that start with a 1 are from the Atlantic provinces, so that's Nova Scotia, Newfoundland, PEI, and so on, New Brunswick. 2 and 3 are Quebec. It gets 2 because it has a very high dense population. 4 and 5 are from Ontario. 6 are the Prairie provinces. 7 is the Pacific region. 8 is not used. And then we have 9 as the most common for temporary residents. So those are people who are in the country for now, need to file tax returns for various reasons. Because remember, it's not based on citizenship, it's based on tax residential ties. So they will need a SIN number while they're resident in Canada. And then if you start with a temporary number, you might have a SIN number that starts with a 9. And then when you become a permanent resident, what happens to your SIN number? Maybe this has happened to someone in the class. Maybe it hasn't. It changes. So you start with a SIN number that starts with a 9, and then it switches to a different SIN number. This happens to our clients all the time. You don't have to worry if it switches midway through the year. You're just going to use the most current SIN number. All of their records will still be tied together. So you'll have some tax slips that start with a 9 and some tax slips that start with a different number. Generally, we see a lot of 6s, but it could be a 4 or a 5. Or again, if it happened in the last 2 years, it really could be any of the numbers. It doesn't matter. Make sure you use the current one. Everything will still be available there. Good. What will you do if someone comes into you and they have some ID that's maybe a little interesting and all of their tax slips have an 8 at the beginning? What do you know right off the bat if you see a SIN number that starts with an 8? It's fake. I mention it in particular because we are going to use SIN numbers that start with 8s for this entire course because we're not going to use real ones. So you're going to get very comfortable seeing SIN numbers with 8s in this class, and then in a real office, if you ever see one, you know that is not a real SIN number. You're not going to be able to file that return anyway. They're trying to convince you to file some kind of paper return or whatever. I don't know why they would, but 8 is never used. Okay. So that's that activity. Again, having a really fun time getting my slides to work. So let's try this. Try it this way. Okay. Yes, this is the slide I want to be on. All right, so that's the first page of the return. We know how to fill out the information. We know what a SIN number is supposed to look like. We know what it tells us about the client we have in front of us. We know about how to enter their family information if they have a spouse. The second page, we have a section for Elections Canada. The first question is whether or not they have Canadian citizenship. Remember, this is not relevant to the tax return. If they say no, they might still need to file a tax return. If they say yes, they might not need to file a tax return. This is strictly so that the government can collect some information that's going to help them when it's time for elections, and that's whether it's federal elections or provincial elections. If you're going to update the National Register of Electors and you are a Canadian citizen, you can do that on your tax return. It is an option. So we ask our clients before we file the returns, do you have Canadian citizenship? If the answer is yes, we ask, do you want to give their name, address, date of birth, and citizenship to the Elections Canada to update the Register of Electors? So again, some people will say yes, some people will say no. Make sure you're asking the question because it is their right to choose. You should not say that they're a Canadian citizen if they're not a Canadian citizen. That's not good. Would it make someone eligible to vote if you put on a tax return that they have Canadian citizenship and they want to update the National Register of Electors? Will that give them the right to vote that they're not supposed to have? Nope, they still can't vote. We can't give people voting rights accidentally on a tax return. All it's going to do is just mess up their records for a little bit and cause them a headache. So try not to do it. For those of you who have filed tax returns for people before, you know that if you make an error on a tax return, you can file an adjustment to fix the tax return. However, you cannot fix the first 2 pages of a tax return with an adjustment. It is not possible. So it's really important that we do not get this page wrong because we can't fix it. It has to go through a different process for our clients to deal with the CRA directly, and it's a real pain. So ask every client if they're a Canadian citizen and ask them if they want to update the National Register of Electors. If they do, it can be very convenient because we get a lot of new taxpayers who are filing their first return in order to get their first government benefits, and they're about to turn 18. And so it's really nice for them because when they file their tax return, they also get the benefit of automatically being added to the voter list. So that can be a really positive thing. All right, then we have a section for under something called the Indian Act exempt income. At some point, we might update the terminology. Indian is not the appropriate term. This is based on a piece of legislation that is quite old, and so it still uses terminology that we wouldn't otherwise use. But essentially, if you are a First Nations individual in Canada, some of your income might be exempt from tax. However, you might want to report that income anyway because it can be used to calculate other benefits. If you're going to do that, you're going to tick the box here. That is outside the scope of this course. So I will say if you are taking this class, you are never going to tick that box. But if you do end up working for H&R Block and you want to work for H&R Block, I really advise whatever office you're working in Manitoba, there is an optional course that you can take, self-directed study, in January or February if you end up working for us, called First Nations Taxation. And it's a very short seminar, really, really useful because we do get a lot of this type of income in this province. And so it's a really useful thing to have, even if you're just a first-year associate, to have at least tried that course once. And that can be arranged if you are looking at working in an office. So for this course, always leave this blank. Here's the really, really critical one, foreign property reporting, T1135. If you learn nothing else from this morning, I want you to learn that this is not a tax return. It is a separate form. It is a type of return in the sense that it's a piece of information you're giving, but it is separate from the tax return. It is a different form, a different document. It is filed separately. If you e-file a tax return and you have a T1135, you also have to electronically file the T1135. The rules for them are different. So we have to answer the question on the tax return of did you own or hold specified foreign property where the cost amount of the property at any time in 2021 was more than 100,000 Canadian. Can someone in the chat window tell me why does the government want to know if you have property in other countries? If you have valuable property over $100,000 in other countries, why do they care? Because we are taxing world income. The CRA will probably know about the income and transactions that are happening in the country because they have access to records in the country. But remember, if you sell property outside of Canada and you have, well, first of all, if you sell property outside Canada but you're filing a Canadian tax return, you have to report the sale of that property on your Canadian tax return. And then, of course, if you have a gain, you are supposed to pay tax. So they want to make sure they know about the people who have large assets in other countries, just to make sure that they are actually reporting all of their income tax. So this must be filled out for every taxpayer who has property outside the country where the cost is more than 100,000. We'll talk about that in a minute, what cost means. Okay. And there's a penalty if you don't. Does anyone know what the penalty is? For every day you're late, $25 to a maximum of what? $2,500 every year that you were supposed to file it. So if you had that property for 8 years and you did not report your T1135 for 8 years and you are over a year late for all of those years, that is an expensive penalty. So very important, we are asking our clients, can you tell from looking at a client walking in the office if they own property outside the country? Nope. Could be an 18-year-old, could be a senior. Don't make assumptions. Ask everyone. You can make a joke of it. You know, I like to, with my very young clients, say, so, by the way, do you own property outside the country with more than 100,000 Canadian dollars? And they go, I wish. And I go, I wish too. All right, Karina has a question. If a person has dual citizenship and is filing taxes in the country, do they need to report as foreign income? Yes. If you are filing a Canadian return, you have to file your world income, all of your income. Now, if you're also paying taxes in another country, you will get a tax credit on your return in most countries. We have tax treaties with almost every country in the world. And so Yes, you will get a credit for what you have already paid, so you're not going to be paying tax on it twice, but you have to report it. Okay, and remember, that's the tax return. When we're talking about a T1135, we're not talking about the tax return. We're just talking about the fact that you have property. Okay, now, not everything shows up on a T1135. Personal use property does not. So, can someone give me an example of what personal use property would be? What is property you could own in a different country that you use for what counts as personal use? Vacation home, the number one. So if you're not making money off of it, if you're not renting it out for, anything other than just covering the cost. So you might have a vacation home in Florida somewhere, and then you might, charge a nephew a small amount to help you keep paying for the mortgage while you're not there. In which case, that's still going to be personal use property. But if you're making money or you're planning to make money on that property, it's not personal use. Good. Other things, a yacht, that would be personal use property. Maybe your yacht is docked in Switzerland. I don't have one, but other people might. That would be personal use property. That you do not need to include on a T1135. Okay. Foreign property held in registered plans. Registered plans are anything with an R in front of it, so an RRSP, an RDSP, that type of thing. If it's held in a registered plan, you don't need to report it on a T1135. If it's investments inside a Canadian fund, so you might have a Canadian mutual fund, you go to a Canadian bank or investment company, and they will sell you a mutual fund that has a mix of international assets in it. So it'll be a US fund or it'll be an international fund, but it's a Canadian mutual fund that's buying all of those stocks. You don't need to include it on a T1135. But if it is stocks outside the country that are being held not in a Canadian mutual fund, like maybe you have Apple stocks, maybe you have shares in companies from different countries, maybe I wanted to invest in the Bank of England, whatever, those investments do need to be reported if the cost, and I'll say cost again, if the cost is equal to 100,000 Canadian or more. What's another type of asset that is very frequently held in other countries that we're now seeing more of? So again, I'm thinking really just starting to come in the last couple of years. It's a thing that people buy, usually as an investment, that counts as foreign property, cryptocurrency. Most cryptocurrency wallets we are seeing are American wallets or other countries. So if the wallet that holds your Bitcoin and your Ethereum and your Dogecoin and you're now receiving NFTs from other countries, if the wallet is located in a different country and the cost value, so the price at which you bought all of those assets, not the current value, because that current value is going to go up and down. So whatever you could sell it for today, we don't care. Just what did you spend on it when you bought it? In that case, it has to be reported on the T1135 if it equals 100,000 Canadian. So that's what we have to watch out for. And the last one is property that is used or held exclusively for business. So if you're running a business in a different country and you own a warehouse or a factory in a different country and that's being used for business only, that does not show up on T1135. Every other foreign property does. So vacant land. If you own a piece of land that has nothing on it in a different country, will that be personal use property or not personal use property? Can't be personal use property. There's actually court cases on this. You can't use that property for your own use until you build something on it. So you might have a piece of land that you intend to be personal use property, but right now it's not. Okay. If there's no income from that land, is it going to affect the tax return in any way? No. There's no income. You own it. It's not going to show up on your tax return. It should still show up on your T1135. And remember, if in doubt, if you put the asset on a T1135, it does not affect your tax return unless there's income, in which case it should be on your tax return anyway. There's no downside for reporting it if it's a gray area, and it might go one way or the other. If you don't report it and the CRA decides you should have, that penalty of $2,500 can be expensive. So if you're really, really not sure, ask a senior associate. But if it's a gray area and it might be personal use or it might not be personal use, it doesn't hurt to put it on the T1135. It might hurt not to put it on. So something to think about. And Brittany says for cryptocurrency, all those folks who bought Bitcoin like ages ago, their cost is 5 and the value is higher. Well, but then there's all the people who bought it when the cost was really, really high, and in the last year or so, not so great. So it really goes kind of both ways. All right, so we're looking at anything that is 100,000 or more. If you add the cost of all of the assets, and I said cost a bunch of times, cost is what you paid for the asset. It's not what it's worth now. And that's really important because remember, most of these things, property values go up and down, stock values go up and down, cryptocurrency values really go up and down. We're not interested for the T1135 about what it's worth today. We're only interested in what the price was when you bought it. If it's in a different country, we also have to deal with exchange rates. And so you always want to make sure you're looking at a reasonable exchange rate. Either you'll know the exchange rate from the day and time you bought it, you might know that, you might not, or you can use the annual exchange rates, which you can find on the Bank of Canada for most of the common countries that we deal with. Okay, we're going to do some practice on some of this. So let's try. Okay, I'm going to ask everyone to pull up a T1135, and then we're going to do one together. And what I'm going to do briefly before we get into that is I'm going to make sure everyone knows how to find a T1135. So I'm going to end my slides briefly. I'm going to switch back to the CRA website that I have here. And I'm going to say, if you know the name of the form you're looking for, it can be really easy to find. You're just going to type in the name of the form. So I could type in T1135. If I don't know the name, but I know it's a foreign income verification statement, I could do that. But in this case, because I know I'm looking for a T1135, I do this one all the time. You're just going to search, and it'll be the first one that comes up, T1135. And then we're going to do a fillable form. Now, this fillable form, for some people, the CRA uses some old versions of PDFs sometimes. And so what might happen is you'll download it and you'll try to open it and you'll get a little, this isn't working. So if you get a, I can't open this, it's not working document, all you have to do is save it to somewhere on your computer. So you're just going to download it to somewhere on your computer, and then you're going to open it up in a different program because it doesn't load in HTML very well. This particular form has been a problem. I'm going over this because you're going to need these for some of your assignments and possibly for exams and things, so I want to make sure everyone knows how to do them. So if I go back in here and I'm going to save my form, then when I want to open it, I'm just going to open up my files, see if I can find a document here. There's my documents. I have documents over here. Okay, going to go into my documents, and this time when I click on it, I'm going to choose Open With, and I'm going to say I want to open it with Adobe. You can use another reader, so I know that some of the other PDF readers will work as well. I know for a fact Adobe Reader works, so I'm going to open it using that one. And when I open it in Adobe, I'm just going to drag this over to the side here. You will get a fillable form that you can open. Okay, so again, if you're downloading it, whether it's in the online forms that we have in ULearn, or if it's online from the CRA and it's not opening for you, save it to a folder and then choose which program you're going to open it in. Run Adobe, open it from there, or right-click and say Open With. Okay, I'm going to make this split screen. No, I'm not. I'm going to drag it off to the right so that I can type in it. But I do want you to notice the form looks a little different. So the first thing is you have to say who is filing the form. Because not everyone who has to file taxes is a physical person. You might be a physical person, you're an individual, or you might be a corporation, you might be a trust, you might be a partnership. All of those entities, types of people, have tax things they have to file, and T1135s count for all of them. For this course, it will always be individual. You're going to enter first name, last name, initial, social insurance number, and then individual code. Can anyone tell me what individual code 1 means? Someone who has done their homework and or knows how to Google things. So you can also look this information up from the CRA website. Generally, when you're downloading a form, there's also some worksheets and information from the CRA for what things mean. Or at the bottom of your forms, there are usually instructions. So what would individual code 1 indicate? It has to do with whether or not they or their spouse is self-employed. What's the difference between box 1 and box 2? Box 1 means either that person or their spouse is self-employed. Box 2 means they or their spouse is not. This changes the deadline. So the deadline for a T1135 is the same as the deadline for a tax return. Whenever the tax return is due, the T1135 is also due. So we have to pick individual code. That's very important. You're going to, in this course, ignore the corporate and trust stuff. The partnership stuff is not relevant to this course. You do need to fill in the mailing address. Remember, this is a separate form. It's not going with the tax return. You need to complete all the information. And they do want a country code. You're going to find the drop-down box is a real pain, but usually you can just type the first letter a couple of times until you get the one you want. And then you need a taxation year. So what is the taxation year for an individual? Everyone in this course has the same taxation year. What is the taxation year in this course? It's the calendar year. So you would put the year you're doing the T1135 for. Let's say it's 2021. From the first month, first day to 2021. From the 12th month to the 31st day. And that's what we're doing for this course. This is relevant if you are a corporation or a trust or a partnership. You might have a different tax year, but for individuals in this course, it's always going to be the same. Then you're going to choose, do you want to do the easy way or the hard way? If you can do the easy way, pick the easy way every time. So if the total cost of everything outside the country, cost, not current value, but cost of everything outside the country is between $100,000 and $250,000, you can use the simplified method. And then we're going to say, yes, I want to do the simplified method. And then all you have to do is say what types of property you own. So if you have funds held outside Canada, funds in this case would be bank accounts. And then if you are trading in foreign currency, you would put it there as well. Cryptocurrency probably would go here as well. They consider cryptocurrency similar to funds. So you're going to tick the box. If you own shares of a corporation outside the country, you're going to say shares. So that will include most of the investments you have that are not held in a Canadian mutual fund or in a Canadian registered account. If someone outside the country owes you debt, that is an asset that you have. You own somebody's loan. They have to pay you. Then you would say debt. Interest in non-residence trust, that's a little more complicated, probably outside this course. Real property outside Canada, real property means land and buildings. So land and buildings that isn't personal use and isn't being used in a business would go here. And then other property. So again, maybe you have a yacht that you don't use for personal, you rent it out and it's used for movies and things like that. Who knows? But you're collecting rent on an asset in a different country that isn't real property. You could say other. Tick every box that applies for your client. So doesn't matter if the individual asset is less than 100,000, as long as the total of all foreign assets are more than 100,000, they have to be reported. So you might have a bank account in another country for a small amount of money, but you also have investments for a large amount of money. In that case, if we're doing the simplified method, I would be saying that I have funds and I have shares. Even though the funds by themselves wouldn't be enough, when you add everything together, the total is more than 100,000. I now have to report everything. Does that make sense? That's really important to understand. Good. Then I'm going to pick the top 3 countries where I'm holding assets. So pick the most valuable asset, put that country first, and then look at the next most valuable and the next most valuable, and you can put the country code in there. And the last thing you have to do is the income. So we have 2 types of income that has to be reported on this form. One is money that the asset is earning while you earn it, while you own the asset. As long as you own the asset, if that asset is making money for you, it's going to go there. What is some of the income we're looking at? So if you own an asset, what types of income might it generate? We talked about some of this last class. Dividends, yes. Rental, yes. What about bank accounts? What type of income do we get from having money sitting in a bank? Interest. Those are the big ones. Okay, dividends, rental, and interest. The second type of income is what happens when we dispose of the property, and this might be gain or loss. What do we get when we sell property? What do we call it when we sell property and we make money? Capital gains. That has to go here. Okay? So separate out the types of income you have from your property, whether it's something you got while you owned it. So as long as you're holding it, it's making money for you, it goes on the first line. If you sell it, you've gotten rid of it, you no longer have it, and that made money for you, it goes on the second line. Try not to mix them up. As soon as you put income on this form, what do you then have to go do with your actual tax return? Because remember, this is not a tax return. If you put income on this form, what should you then immediately go and do? Go add it to your tax return so you don't forget. Your tax return will have income that is not included on here. It will have income from foreign property that's not included in here because maybe, for example, you sold a personal use property in a different country and you didn't need to file a T1135, but you had income from that. You have to put that. Okay, but if you have income on here, you definitely have to have income on your tax return. So they need to match. Okay. Any questions about the simplified method? Use it anytime you can. If you have a choice, do simplified. It is a lot less work than the detailed method, which means you're going to make fewer mistakes. And we want to reduce the number of mistakes. So total cost of all the assets is $100,000 to $250,000. Do it this way. If the total cost is more than $250,000, and remember, this is converted to Canadian, so it doesn't matter what the foreign value is, it matters what the Canadian idea of that is. So exchange rates. Do the exchange rates first, then decide if you need to do a T1135 and what type. If you don't have a choice, you're going to pick Part B, and then it's going to clear all of that. Then we have to do the complicated way. I'm going to say, read what it is asking you and don't guess what the government wants you to send. If you read the columns carefully, you will get this correct. If you think the government needs me to tell it stuff, you will get this wrong. So you have to categorize the assets first, funds, and then shares, and then debt, interest and trusts, real property, other property, and property held in account with the Canadian Registered Securities Dealer. We're going to be dealing with columns 1, 2, and 5 in this course, but the other ones are a little bit more complicated. So read the column very carefully, add a line for every new thing you have, and then at the very end we have certification, and we're going to practice this in just a minute, so don't worry. The taxpayer is going to then print their name, sign it, add their phone number, and then remember to file it. So if you are filing returns for a client, you've got their tax return done, you've done their T1135, it's all in the tax software, you've e-filed their tax return, you are not finished until you also e-file the T1135. Now, I had a client who had foreign property that was worth a lot of money, and some business income in a different country, and they were terrible about getting their business stuff together. They were late for every business return for years and years and years. What do you think we did to keep their costs down? We couldn't file the tax returns. We didn't have the data. What can we file on time, even though everything else isn't ready? Because before they came to us, they were paid penalties for the T1135 every single year because they were late for their T1135 every single year. That we had the data for. It was an asset that they never sold, and that asset most of the time did not generate income. So we knew they needed to file a T1135 by the deadline. We filed the T1135 every year on time and immediately saved them thousands of dollars in penalties just by doing that. So you don't have to file them together. If you have the data for one, get that one in, and then keep working on the data for the other. All right, let's do some practice because this is something that I think you are going to want to practice. So I'm going to pull this for myself off to the side so that I can work on it. And we're going to pull the slides up, and I'm going to give you an example to try. And we're going to kind of do this as a class as well. So let me get my chat windows up. Here we go. So we have Mario Gonzalez. He is single. We have an address for him. He inherited American stocks from his aunt who passed away. The stocks were worth $200,000 American when he acquired them in 2018. In 2018, did he need to report income from his inheritance? Did he need to report that he got $200,000 of an inheritance from his aunt in that year? Did that need to show up on his tax return in 2018? No. Remember, inheritances, not taxable income in Canada, not going to show up anywhere. He got $200,000. He said, "Thank you, dear aunt. I'm sorry you died. I appreciate the investments." And that is what happened in 2018. Okay. However, in 2018, once he owned the stocks, did he need to file a T1135? Yes. Has nothing to do with the tax return. It has to do with the fact that he owned them, and at some point in the year, the cost value was more than 100,000 Canadian. So he had to file a T1135 that year, but it did not affect his tax return at all in 2018, except he's going to tick the little box on what is now the second page of the tax return to say that he had a T1135. Okay, so he held on to the stocks. The fair market value right now in 2021 was $210 American. He didn't sell any of the stocks in 2021. The annual exchange rate, I've given you two exchange rates, 2018 and 2021. My first question, and we're going to do participant check boxes. Tick yes if you think in 2021 he needs to file a T1135. Give me a red X if you think he doesn't. So does he need to file a T1135 or does he not need to file a T1135? Okay, I've got a mix. And I would like some more participation from a few more people. Okay, in 2021, does he own assets outside the country worth more than 100,000 Canadian dollars? Yes, he does. That is the only question we need to answer. So yes, he must file a T1135. So we're going to file one. My next question for you is a little bit of a trick question, so be careful. Are we going to file simplified or are we going to file complicated? So part A or part B, you are going to need to know the cost of the stocks in Canadian dollars. So I'm going to ask you to figure out what the cost of the stocks in Canadian dollars was and type your answer in the window. You're probably going to want a calculator for this, and while you do that, I'm going to do the same thing. Okay, so if you've got your calculator, I've got a bunch of people saying we have to do the detailed method. I agree with you. Can you give me the cost in Canadian funds? What is the amount? Because you might have gotten the right answer for the wrong reason. So it's 259140. How did I get that number? Well, when he bought it, it was 2018. In 2018, it was worth $200,000, and the exchange rate for 2018 was 1.2957. So if I take 1.2957 and I multiply it by 200,000, I get 259140. That is the cost, which is just a little bit more than 250,000 Canadian. So until he sells some of the stocks or all of the stocks, have to do Part B. Let's do Part B together. So take a minute, and I'm going to clear this here. And when you think you have the section of the T1135 filled out, give me a green check mark to say I have Mario filled out. So you're going to be putting in that he is an individual. You're going to be entering his SIN number. You're going to be saying, is he self-employed? I'll tell you he's not. If you haven't asked otherwise, he's not self-employed. So make sure you've marked him as not self-employed. Enter his address. Tell the form which tax year we're filing it for. That's very important because they're not going to know that it's for 2021 if you don't tell them it's for 2021. The form looks the same every year, and it's a separate form to the tax return. It's not connected. Fill that in, and then you're going to fill out Part B. You're going to say that you're filling out Part B, and you're actually going to fill out Part B with the stocks. When you have that, give me a green check mark. Okay, I'm going to leave this on my screen for now, and then I'm going to see if I can drag over my answer as well, because I have done this ahead of time. Remember, when you get to Part B, answer the question that they are asking in each column. So read it very carefully. Okay, I think this is important to practice because we're going to do it today and then we're never going to do it again, except on assignments and in real life. And so it's really, really important to make sure you all have done at least one. And I've made this one a little bit difficult so we can practice the harder version of it. I will say after today, if you feel like you need more practice on T1135, send me an email and I will send you extra T1135 practice. And if you want the answer to the extra practice, send me your answer and I'll mark it for you. And I'll give you corrections. I have made some extra ones for anyone who wants them. All right, we've got 2 people who are ready to go. If you are ready to go, give yourself a pat on the back and give everyone a little bit more time to type. I'm going to see a few more, and then I'm going to start putting my answers up. 1, 2, 3. Get one more. There we go. All right, so let me see. I'm going to try a screen thing and see what happens. Do this. All right. Nancy, can you let me know, is the T1135 now showing up on the screen, or is it still the slides? Is the T1135? Excellent. All right. So I have my first page. Let me see if I can make this a little bit bigger for you. Okay, so we have individual, and his name is Mario, and his last name is Gonzalez, and we have a social insurance number, and it is individual code 2, because he is not self-employed. So 2 is no, and 1 is yes. That's how I remember it. And we have Main Street, Winnipeg, Manitoba, with a postal code Canada. I have 2021-01 to the end of the year, and I have B. And yes, I did put the easy part, so let's take a look at the harder part now. I have pre-filled the next couple of questions, so I'm going to scroll down really, really fast and try not to show you too many answers. Okay, here we go. Let's see if I can make this just a little bit bigger, and that will take my extra numbers out. Excellent. Okay, so we now have the shares because he has stocks. Stocks are shares. You should be filling in part 2. When you fill in part 2, you're going to say the name of the corporation. Now, in real life, you'll probably have a list of corporations, and you're going to enter them, or you're just going to say various, and then you're going to have a document with a list that you can send with it, because I've had people who will have 60 different foreign shares, and I'm not going to put 60 columns in. I'm going to do a summary, and I'm going to tell the CRA, look at my attached page with the nice spreadsheet that makes everything pretty. But in this case, we just said stocks. You're going to put U.S. stocks. Country code is USA. They want to know the maximum cost amount. So at the time when you owned the most shares, what were they worth? And that was the end of 2021 and also the beginning of 2018, because he's never bought more and he's never sold any. They're always the same. So he's had the same shares. He hasn't done anything with them. The maximum cost was $259,140. We figured that out together. At the end of the year, he still has them. So the cost at the end of the year is $259,140. If he bought more shares, then the maximum cost would be higher and the cost at the end of the year would be higher. If he sold some or all of the shares, the maximum cost would be the highest number we have. The cost at the end of the year would be whatever the lower number is, or if he sold all the shares, would be 0. And at that point, we would expect to see a gain or loss. We want to see when he sold the shares, did he make money or did he lose money? Okay, so you're always looking for maximum, and then what did he have at the end of the year, but cost value, not current value. In this case, there's no dividend income, and he didn't sell them, so gross income 0 and gain or loss is 0. Is anything going to show up on the tax return related to these shares? In this case, on the tax return, will there be any entries for the shares? No, because there's no income. So we don't need to put anything on the tax return, but we do need the T1135. Okay, are there any questions about what I did? If not, we're going to practice the next one, because I'm going to tell you his aunt was very nice and she loved him very much and she left him even more things. So let's try some of the even more things. Okay, I'm going to take this away. I'm going to go back to here, and I'm going to say he also inherited a condo in Florida in 2018. When he acquired the condo, it was worth $75,000 American. His plan was to hold on to the condo and then sell it for a profit in the future. He wanted to hang on to it. His intention was never to use it for himself. It was always an investment property for him. Wanted to hold on for a long time, but the pandemic was rough, and he's like, you know what, this is a pain. I'm going to sell the condo. He was fortunate. He sold it for a little bit more than he bought it for, $78,000 American, after taking off all the fees. My first question for you is, if the only asset he had, if the only thing, he didn't have the stocks, if the only thing he had was the condo in Florida, would he need to file a T1135? No. But you have to be careful when you say no if you're looking at a number like 75,000, because you have to factor in the exchange rate. I have seen people get caught with this. If they have a property worth 90,000 American, in Canadian, it's generally worth more. So you have to think about that. In this case, no, he wouldn't need to. Okay. If it was a Florida condo that he thought, great, I have a Florida condo, I'm going to vacation in the condo. I'm going to use it for myself. I'm going to go to Disney World 3 times a year. I'm going to have parties with my friends. Would he need to file a T1135? No. If it was a vacation property and he owned the stocks, would he need to put the Florida condo on the T1135? He has to file a T1135 because of the stocks, but would he have to report the property? No, because it's personal use. If it was personal use. In this case, it's not personal use. So because it's not personal use, now he has the stocks and he has the condo. Now, does he have to report the condo? Yeah, make it easy. Just use it. He wasn't using it. He wanted it to be an investment property. His intention matters. So we're stuck in investment property. It's less than 100,000 Canadian in cost, but this plus the stocks is more than 100,000. So we have to put it on the T1135. So I'm going to ask you to put the condo on his T1135. Keep what you've already done. We're in the detailed method. We're stuck with the detailed method for now because of those stocks, which were worth a lot of money. So I want you to go back to your T1135. I'm going to clear this. And when you get your condo property put in, let's see, and we'll take up the answer together. Give me a green check mark when you have an answer. I'm going to give everyone maybe 2 minutes. Okay, so he acquired the property for $75,000 US. He sold it in 2021 for $78,000 US. Find the section on the detailed method that deals with the property, and then answer the questions in each column. And I will leave this up so you have the exchange rates because you're going to need them. Okay, just keeping an eye out. We've got one person has their answer. That's great. Okay. For those of you who don't have a handy-dandy calculator out, there are calculators on your phones and there are calculators on your computers. You're going to find what works for you. We're going to use calculators a lot in this course, so make sure you have one. I used to have a calculator at my desk, and then we all got smartphones, and now I have my phone on my desk. And I don't answer personal calls on it, but I do explain to my clients, I'm just going to need a calculator for just a minute here, so I'm going to use my phone. All right, we've got enough people. I think we can pull it up. Let's take a look at the answer here. And again, I'm going to scroll down to the real property section. So you should now have a Florida condo. Again, in real life, we need to add a bit more description. So I would put the address of the condo or something that identifies it. If it was a Canadian property, it wouldn't be on here. But for example, you might have a roll number or something that identifies the specific property. I'm going to put the country code again is the USA. They want to know the maximum cost amount during the year. Hopefully you all remembered that the cost amount is what he acquired it for. What was the value when it became his property? And that's the 75,000 American using the 2018 exchange rate. So the reason I got that number is it's 75,000 times 1.2957 is the 2018 exchange rate, because that was what it was worth when he got it. At the end of the year, why is the cost amount 0? So why is the condo suddenly worth nothing? Because he sold it. So he no longer has a property. So the cost amount is 0. That tells the government that that asset is gone. It's not going to expect to see it next year. It is going to expect to see a disposition of capital property on the tax return. So as soon as you dispose of capital property, you have to report it on the tax return. I'm going to have to make sure that it shows up on the tax return somewhere. Okay, income is zero because he wasn't renting. If he was renting the property, he might have rental income. What he has instead is a capital gain. So when he sold the property, he made a tiny amount of money. He didn't sell it for very much. That wasn't his original plan, but he did make a little bit of money. How did I get that number? How did I come up with 596? Someone who got the same number that I did. I'm going to take the value at which he sold it for in Canadian dollars. So he sold it for 78,000 with the 2021 exchange rate, and then I'm going to subtract what the cost value was, and that will give me the gain. And now, what do I have to do with the gain? I have income of a sort. It is a capital gain income. What do I have to do on the tax return? Enter it on the tax return. It is taxable income. We'll talk about capital gain income later, so you don't need to know how to do it. You just need to know that it will happen. And eventually I will teach you how to do it, and then you can finish the return. So there we go. We have done the stocks, and we have done the condo. And the next question that I ask my client is, all right, anything else? Do you have any assets in another country, anywhere? And he says, yep, of course he does. He also went to do some school in the United Kingdom. While he was there, he opened a bank account. His parents put some money in it for him. He put a bit of money in it. He just never bothered closing it because he thought, well, that'll be handy. If I ever go back, I'll have my bank account there. So he has a bank account in the UK. He entered it in 2017. He never takes money out. He never puts money in. He just lets interest accrue. So again, if this was the only asset he had, we wouldn't need to file a T1135 at all because it's only £10,000. But because he has the stocks and he has the condo, or he had the condo before he sold it, we're stuck doing a T1135. Now we need to report all of his foreign assets. So we have to find a place for this as well. So I'm going to ask you to go and find the place where you would put bank accounts or funds and fill that in. And again, be careful. The funds are tricky because money is always worth what it's worth. So it's not like stocks or cryptocurrency or shares or condos where you have a cost and then it goes up and down that doesn't mean anything until you sell it. Cash is what cash is. So same rules. I'm going to clear my screen here, go into your second page, enter in the answers, and give me a green check mark when you think you're done. I'll have taken another 2 minutes to do that. Read the columns very carefully. This is a place where you can go wrong unless you are being careful. I should also promise anyone who's stressed about this, this is the most difficult exercise in a T1135 you're going to do for this course. I want to give you all the complex things now so that anything you actually get tested on will feel easy. But I also want to give you real world examples because I will tell you all of these types of things come up when you do tax returns for people. So it's really nice to have done this in detail at least once in your life before you have to do it for a client. So that's why we're practicing it today. right, I'm not seeing anyone finished yet. I'm going to give you one more minute. Oh, there we go. We've got one or two. Okay, so we're going to do it because we do have more things to do today. All right, keep in mind we had 10,000 at the beginning of the year, 10,600 at the end of the year. How does that happen? Well, if you leave your money in the bank, they give you more money. It's called interest. So that's what happened because he didn't put anything else in. If he did put money in and take it out, we have to get bank statements to find the interest amount, but in this case, we're just going to calculate it. So I'm going to go up to funds. Funds held outside Canada. Name of the bank, I decided it was the Bank of England. Normally, you just have the name of the bank. You get that from the client. Country code might have given you a problem. One of the reasons I did this one is because the UK is really hard to find. So country code, GBR, Great Britain. If you can't find it on a list, you can Google country codes, and that will be a way to find it. Every now and again, your clients will throw a country at you that you just haven't dealt with before. It's really good practice. So GBR, if you didn't find it now, you know. Great Britain is what you do for anything in the UK, generally speaking. They're going to ask for the maximum funds held during the year, which is what was the largest value. It's 10,600, and we have to convert it using the current exchange rate. So that's 18,281. Rounding up. Rounding is important. You cannot put decimal points in T1135s. They only do to the nearest dollar. We do mark you in this course on your rounding. So if you're on a tax return, I want 2 decimal points rounded correctly. If you're on a T1135, no decimal points, but still rounded correctly. So 18,281. Funds at the end of the year is the same, 18,281, because he didn't take any money out. And his income is interest. Interest income, 600 pounds. So it was 10,000 at the beginning, 10,600 at the end. I wish I had a bank account that paid interest like that, but hey, I wanted to give you guys some practice. So you're going to do the conversion first, and then you're going to subtract the large number from the small number. That gives you 1,035. What do you have to do with the income? Enter it on the tax return. You would have had to have done that whether it needed to be on a T1135 or not, but especially if it's on a T1135, you need to make sure it matches. That's it. We are done. That is T1135s. I've given you the hardest possible one I can. Like I said, if you have questions, if you want a copy of this practice exercise to practice again at home, send me an email. I will send it to you. If you want another practice one, you're like, I don't think I've done enough, and Mario has too many assets, give me someone else. I will give you another one. Send me an email. If you want an answer to the one that you've emailed, send me your answer, and I will tell you if you got it right, and if you got it wrong, I'll tell you what you did wrong and how to fix it. Okay. Good. I'm going to close that for now. I'm going to say let's take a break because that was a lot. It's 10:41. Let's come back at 10:46, and then we're going to go really fast through the next section of the tax return. All right, so take a break, stretch, pat yourselves on the back, and we will be back shortly. All right, we are back from break. I know it was a short break, and I know we did a lot. We're going to start talking really quickly through easy things now. So the good part is the next thing that we're going to do is not going to be as hard as what we did this morning. Okay, give me a green check mark if you are back so that I know you're here from break. Wonderful. Let's keep going. So we have talked about the first 2 pages of the tax return and how to do a foreign verification statement, something that might help you for those of you who have people who have a lot of investments in other countries. What you'll find is if you're lucky, this doesn't happen for all of our clients, but some of our clients who have a lot of assets in another country, they will have a manager who will also issue you with your statements a T1135 summary so that you will get the figures from the investment advisor telling you what to put on a T1135. I love when that happens. It saves me a lot of time. On the other hand, we have clients who do their own investing and they manage their own assets. So I have one in particular, has foreign assets in multiple countries, some stocks, some rental properties, some all kinds of different things, some debt that like he sells debt to other people. People borrow money from him. And we just spend several hours every year sorting out spreadsheets and exchange rates and when he bought things and when he sold things and from the time that he owned it to the time it was gone, and we have to sort all of that out. Find a way to put it on the tax return, and then make sure we're also doing the T1135. Now, again, that's more complicated than what you'll have to do because you're not going to deal with complicated investment properties. But in this course, even if you are doing simple returns, it is very common that people will have some foreign assets. So you might have investments in the U.S., you might have someone with a vacation property that they're also making some money off of. Maybe they're renting it out on Airbnb when they're not there. Things like that. So you need to be aware and asking people about their foreign assets. Remember, if you miss it, it's a very expensive penalty to your client. If they were supposed to be reporting T1135 and they weren't, and they get over a year and then they get caught, $2,500 right out the gate, not to mention anything that wasn't reported on the tax return that should. So always ask the question. All right. We've made it through that. We are then going to look at our total income. And again, if this page is very small, you have a copy of a tax return in front of you. You can read off of it. And we're going to start filling in some of the income today. So remember, if you're putting income on a tax return, if you're adding income to a return, you want the line number to start with a 1. A 1 is going to increase the amount of income that's being reported. Okay, and we're going to start with income from an office. And I'm going to ask, generally speaking, there's lots of different types of income that we can have. So if you have had income from employment, what tax slip do you receive in Canada at the end of the year that says this is how much money you made that you have to report on your tax return? Excellent. It's a T4. Okay, you'll find when you work in a tax office that clients call everything a T4. If they have a slip with a T on it, they just call it a T4. But T4s are specifically where you report income from an office. So in this, I'm going to be very specific in what I say. And the general thing, salaries are going to show up on a T4. Now, I'm going to see what my next slide is. This is what a T4 looks like. Okay. And what you'll find, and this is what I love, when you have a T4 in front of you, now we're seeing fewer of them in person and seeing more of them online. So that's something to be aware of. When I started doing tax returns, we never downloaded T4s. We could not download T4s from the CRA. If we wanted to get the figures from the CRA, we had to phone them, which was fun. I spent a lot of time phoning the CRA. Now we can download them directly from the CRA in most cases. So our clients are not bringing us physical pieces of paper, but some do. The physical piece of paper is wonderful because on the back of it, it tells you what all the boxes are and what to do with them. It tells you where to put the income. So when you have a tax slip, you're going to have a number, and then you're going to have instructions for where that number goes on the tax return. So right at the top of the T4, we have the employer's name. We know who they're working for. We have the SIN number of the client. This should match the SIN number the client gave you. The exception, of course, being someone whose SIN number changed during the year. If they were a temporary resident and now they're a permanent resident, it'll start with a 9, and then now they'll have a new SIN number, or they may have 2 different SIN numbers. So that's the SIN number. You're going to have the employee's name, and then you're going to have the province of employment, because that's where they've been taking the tax off at the rate for that province. We're going to talk more about some of these boxes next class, CPP and EI exemptions. We're going to talk about next class. Employment codes we'll talk about later. But then we're going to start talking about the actual box numbers. The common ones are on the right side. They are very common, so they show up on all of them. And then we have a box at the bottom for other. So I'm going to ask what all of these boxes are. Now, if you're having a difficult time finding the information, you can Google this on the CRA as well. So I might, for example, want to go find the CRA website, and I'm going to go back to my CRA website here. And what I can do is search for a T4 slip. And if I search for T4 slip, it's going to give me more information than I need. It's going to give me an employer's guide, which I probably don't need, and how to fill it out, which I don't need. But it will also just give me the slip itself. So if I choose T4 slip and I open it up, What I like about this is it's going to give you that second page that I was talking about that tells you what all of the boxes are and what to do with them. So box 14, it tells you that is employment income. It is taxable employment income, and it tells you put it on the tax return on line 10100. So that is my favorite thing about a tax slip. If you don't know what to do with it, read the back and it will tell you what to do. You can find this slip, a copy of it, in CRA the way that I did, or in your tax reference guide. It will have a copy of most of the common tax slips. T4s are on there, as well as a summary of what the box numbers mean, what the most common ones mean, and what to do with them. So if you're not sure, read the directions. So box 14 we've talked about. It goes on to the first income line on the tax return. It goes on line 10100. Good. Can anyone tell me what box, let's do box 40. What is the box 40? So we have a box 40. It's $500. It is taxable benefits. So most of the time, our employers give us money that we put in the bank and we spend on things, but sometimes they give us other things. We don't need to know what those taxable benefits are. We just know that the client has them. Where does the box 40 go on the tax return? This is a complicated question, but if you read the bottom of the tax slip or you look, it goes nowhere, which is correct because it's already in box 14. So some of the information on here is what we call reporting information. It is useful information to know, but it's not going to affect the tax return. So box 40 is a thing that exists, but it's already included in box 14. We don't need to put it in twice. So anytime you see that it says already included in box 14, don't duplicate the income, only put it down once. What do you think the CRA would do if the tax slip said that you had $18,920 and then you reported to the CRA that you had that plus $500? Do you think the CRA would say, oh, that's not what I have on my slip and reduce it for you? Or do you think the CRA would say, oh, you're reporting an extra $500? Sounds good to me. They would just add the income in. So if you report income that you're not supposed to be reporting, generally speaking, the CRA is happy to tax you on the more income. So be careful that you're not duplicating things. Good. What about the box 42? That's another one. So box 42, what type of income is it and where does it go on the tax return? It is commissions. It is already included in income, but it has to go on the tax return. So here, bear with me while I flip screens again. I'm going to go into a tax return. So I'm going to have to pull up the tax return. Let me do it this way. CRA tax package. And if you have to, this is really good practice for how to find a tax package. I want a Manitoba one. I want a tax return. I'm going to do the fillable one just because it's nice to have my fillable boxes. I'm going to make it big. And I'm going to go down to the income page. I'm going to put my box 14 here in line 10100, and then I'm going to put my commissions on the left in line 10120. It's already in, but I need to report it. So what I want you to notice is on the tax return, we have different columns. On the left of the tax return, we have what are called reporting numbers. They don't change the final answer on the tax return. They're just information that the government would like to have for various reasons. Information on the right column, the very far right column, will change the tax return. So you have to fill everything in because the CRA needs some of those numbers, but it's not going to change the return. So you're going to notice my income numbers are going on the very far right side. The things on the left are just reporting. I can tell you commission income is necessary when we're calculating employment expenses. Some employees who have commission income can claim extra types of employment expenses, but to do that, we need to know how much commission income they earned. That's why it goes there. You don't need to know why it's there. You just need to know that you have to put it there. So in this case, we would take that box 42 for the T4 and we would put it on the reporting line for commission income. The total income is already reported in box 14, and that's going to go here on line 10100. Are there any questions about that? Okay, I'm going to flip back to my slide. I'm going to ask you now, what would box 44 be? And Brittany says line 10100 would have the commissions deducted from it and the commissions put on line 10120. No, 10100 has the commission added. We're leaving the commission in. Box 14 goes on that line and we don't change it. Yep, and then we just report the commission income on line 10120 and it doesn't affect the return. Okay, box 44, excellent. Union dues. If you have union dues and they are reported on your tax slip, so if your employer knows about your union dues, they will put it here. You can also have union dues on a receipt. We'll talk about that later. A few other things I want you to notice. There's CPP contributions, box 16, EI, box 18, RPP we're going to talk about today is box 20, and the pension adjustment we'll talk about today. So a lot of these things we're going to talk about. There are other ones that you may know, you may not know, and if you don't know what the box number is, my best advice is look it up and then follow the instructions and do what it tells you to do. Either it will be something that's already included and you don't need to put it somewhere, or the tax slip will tell you where to put it. Let's get into the details on this. So T4s, very common, reports of most of our income. There are a couple of special types of income that are taxable some of the time. I'm going to go through this slide very quickly because we're going to come back to it in Chapter 3. If you have a T4 and you're an emergency service volunteer, so that might be a volunteer firefighter, we do have those in Manitoba, so we do see these tax slips on occasion, or you might be search and rescue volunteers. You will have a box 14, which is all of your salary, but some of it might be exempt. So you might have a T4 with a box 87. Up to $1,000 of your volunteer income is exempt from tax. If it is exempt, it will be in box 87 and it will not be included in box 14. So you're going to have a box 87. It tells you that income exists and that it's not showing up anywhere. In Chapter 3, we're going to talk about a special credit, and I haven't said what credits are yet, but when we get to that, I will talk about it. If you're going to use that special credit, there's something we have to do with this income. So all I'm going to say for this right now is box 87 is a special box number with special rules. We're going to talk about it next class. Okay? But it doesn't show up on the tax return unless we are doing the special thing that I will teach you next class. Included in income, we have things that are related to income that don't show up on a tax slip. So sometimes you have taxable income. It's money that you've earned from work that you're doing that's not reported on a tax slip, and we need to put that on the tax return. There are different places to put it on the tax return, and it can get a little bit messy as to what counts as how we classify the income. The most common thing that is considered other employment income goes on line 10400. That line is called other employment income, so that helps us know what it is. Casual labor, odd jobs, we've talked about that briefly last class. Remember we talked about babysitting. If you're babysitting and you're being paid to babysit and it's something you're doing casually on the side and not as a business, you do need to report that income when you're filing your tax return. That would go on this other employment line. The big one is tips. Now, some tips are already included in box 14. Some service industries collect the tips that they get from credit cards and they already factor it into box 14. It's already there. Other ones don't, and some places are a mix. Okay? Why is it important to keep records of the tips that you earn if you're in the service industry? What can the CRA do if you work in the service industry and they know that you're receiving tips, but you have not reported any tips? They can estimate them. So one power the CRA has, because this is a self-assessment system, is the CRA can say, well, I know for a fact, because I do investigations, that most servers have a large portion of their income from tips. And so if you've put no tips, I know you had some tips. I'm going to decide what your tips were. And if you don't like that answer, you need to prove otherwise. So it is the responsibility of the taxpayer to keep a log of their tips. I recommend for all of my clients in these industries just to keep either an app on your phone or a notebook or a paper calendar in your car, whatever works for you. Every day that you earn tips, whether it's cash or credit, write down the tips you got in a book somewhere or on your phone somewhere. At the end of the year, you're going to add those all up together and you're going to make sure that you've reflected your tips on your tax return, because if you don't, the CRA will helpfully do it for you, and they usually assume you've made at least 20% of your income again in tips. It's a very high number in most cases. So if you can prove your tips, they will accept the number you give them. If you can't prove your tips, they will pick a number for you. Okay? Any questions? If you have tips, you put them in line 10400. All right. I would like to talk very briefly about the other things that happen when you have casual labor and odd jobs. Oh, Helen, what did they say if they didn't get any? Well, you're going to have to prove that you didn't get any, which is very hard to do if you are in a server industry or in an industry that traditionally gets tips, because it's very hard to prove a negative. You might have to get a statement from your employer saying, we don't collect tips. There are a few restaurants that don't collect tips. They don't allow tips to be collected. If you can get a third party who's not related to you or invested in you in any way to prove otherwise, then you can get it reversed. But most of the time when people say they didn't get any tips, they did. And for my clients who are keeping records, they actually say at the end of the year, I had no idea I made that much in tips. I have no idea what I spent it on. It's gone. So estimating tips is not an option. People will come to you and they'll say, oh, I was told I just need to estimate, or it's probably about whatever percent or 1%. That is not true. There is no magic number. It is whatever your records are. And if your records aren't, if you have no records, the CRA gets to pick the number for you. So I give this lecture all the time to my clients, and you will get very comfortable practicing this lecture as well. All right. So we have other employment income that can get a little bit fuzzy as to whether or not it's actually casual labor that goes on line 10400 or some other type of income. And that I'm going to get into very briefly in this course. The more complicated details of this are a more advanced course. But generally speaking, we have to decide whether or not income is from employment, meaning you were hired by an employer to do a job, or it's from self-employment, as in I am offering my services as a business with the intention of making money, or it's casual labor, I'm doing something on the side, or it's a gift. The test generally comes down to who is in charge of the money. So if you have someone who tells you where you have to be, when you have to be there, and how much you're going to get paid, then you're an employee. And if you're an employee, you should be getting a T4 from that person, and you should be reporting that income on line 10100. It is employment income. If you are saying, I am willing to work for this much money and I will decide which days I'm going to work on it, I'm going to bring my own tools, you're probably self-employed, and then you're going to be reporting that as self-employment income. Then we have this in-between where you're not really doing it for a profit. It's just a thing that happened and you made some money on the side. In that case, we have casual labor. And then sometimes you do something and someone gives you a gift. And remember, gifts are not taxable on the tax return. So when someone has this kind of murky, I'm not sure what to do with it, income, we as taxpayers or tax associates have to decide how to put it on the return in the right place. If it's really, really difficult to tell, because there's lots of employers out there who like to call their staff independent contractors, even though they really should be paying them a salary, there are things that you can do. You can ask the CRA for an assessment and say, hey, CRA, what do you think? Am I an employee or am I self-employed? And the CRA can decide that for you. For many, many reasons, that can be difficult to do. So we just have to do the best that we can with the information we have. But we should be asking questions like, where should this go in the real world? So let's practice that. I'm going to give you a little activity here. We're going to do some annotations. So your annotation toolbar should be popping up now. I'd like you to make a mark in the column that you think is correct in this case. So where would this income go on the tax return? Dennis notices his neighbor who broke her foot is having a hard time shoveling her sidewalk. He offers to help her out for a few weeks, and she says, "Oh, that's really nice. I don't want you to go to any trouble. I'll pay you $25 when it snows." So for a couple of weeks, he shovels her walk, and she pays him $25. Do you think that that is taxable, not taxable? If it is taxable, is it employment income? Has she hired him as an employee? Is it casual labor, or is it self-employment? Okay, and I've got a mix of answers. We've got people saying it's not taxable and people saying it's other employment. This is the definition of casual labor, odd jobs, income that you have earned from work that you're not going to get a tax slip for. So common ones we see that you don't get tax slips for happens all the time. People who work for elections. So if you're volunteering in an election, you're doing polling or whatever, whether it's a federal, provincial, often you don't get a tax slip, you just get a check. That's casual labor. You're not doing it on a regular basis. It's a few times a year, if that. So it's casual labor, goes on line 10400. In this case, definitely 100% line 10400. So I'm going to give you a nice big check mark to say this is the correct answer. All right, let's try another example. And we're going to do Dennis and his neighbor again. This time, he noticed it, and without asking, he just shoveled her walk. He was like, "I feel really bad. I'm going to shovel her out because I know she's struggling." She says, "Oh my gosh, that was amazing. Thank you so much. I couldn't have made it through the winter without you." And she gave him a $50 gift card. Income that goes on a return or not income that goes on a return? Everyone's saying not taxable. I agree. Gifts are not taxable. He did not intend to get money for this. He had no idea he was going to be getting anything for it. If she had given him $50 in cash, would your answer change or not? If she said, "Thank you very much," and she gave him a nice little note and dropped $50 in his mailbox, still not taxable. It's just a gift. Okay. Excellent. Good. We've got a few more examples to see where else we can put things, how it might be different. This time, Dennis is in university. He'd like to earn some money, so he said, "You know what? I'm going to offer snow removal services for all of my neighbors." 4 of the neighbors have said, "That sounds great." And he's like, "I'll charge $10 for every hour that I'm shoveling." Is it taxable income? If it is, where does it go? See a lot of people saying self-employment. I agree. We are now doing a self-employment return. And you're not going to do that tax return. You need to take more courses before you can do that tax return. But that is definitely taxable income, and we would want to see it on a self-employment line. Wonderful, because he's deciding when he's going to work, how much work he's going to do, and how much he's going to charge. And we have one more. You probably can guess where this is going. I'm very predictable. His neighbor is elderly. She says, "You know what, this is way too much." She says, "Dennis, you're young. I will pay you $10 per hour if, as long as every time it snows, within 2 hours or by 9 a.m. the next morning, you clear my sidewalk." All right, and we have a mix of answers here. And I'm very happy with your mix of answers. So yes, the technical answer is she has hired him as an employee. She is setting what he's going to get paid, when he has to do the work. She is in control of all of that. She has hired him as an employee. Now, in real life, she's probably not going to issue him a T4, which she should be doing, and deduct CPP and all of that stuff. In real life, we would put this on line 10400 because for this kind of thing, we're going to do the best we can do. But the technical correct answer for the course is that this is employment income and should be included on line 10100. We're just going to work with the realities that we have. This gets tricky when we see babysitting / nannies. Okay, so babysitting, very often self-employment, sometimes casual labor, but if they are living in your house and you are deciding when they're going to work and how much they're going to work, and you are going to their house to look after their child, most of the time you have an employee, and in that case, you need to be setting up a payroll account with CRA and issuing T4 slips and deducting tax and CPP for your employee who is working for you. So there are times where we are in this gray area where it could fit into a lot of different things, and it just depends on who's in control. Excellent. Very, very good. You'll have more examples of this later, but I just want you to be thinking, is it taxable? If it's taxable, where should I put it? Okay, now there's other types of income that does not come, income related to employment that doesn't come on a T4 slip. It might come on a T4A. This is what a T4A looks like. You can also find an example on the CRA by Googling CRA and then searching for a T4A slip and pulling one up. It has a second page with lots of box numbers on it that will help you know what to do. In our tax reference book, you'll find a T4A slip, and again, a lot of the box numbers will be explained with what to do. We're going to see a lot more of these when we're dealing with our income from seniors, because a lot of pension-related income shows up on here. I kind of think of a T4A as a place where you put other kinds of income that has to show up somewhere, and I don't have a good place to put it on a T4. So that's how I categorize it in my head. A few things that are relevant to today, you might see a box 118. Does anyone know what a box 118 is? You're welcome to look it up. 118 and 119 are very, very common. If your employer is paying medical premiums or group life insurance plan premiums on your behalf, again, most of the time we see this with seniors where they're not currently employees, because medical premiums for someone who's currently an employee is usually box 85 on a T4. But if you're receiving it through a pension program, it'll be a box 118. And again, if your employer is paying for life insurance for you, that's a box 119 group life insurance. Group life insurance is reported on line 10400. It is other employment income. There are some veterans benefits that might show up that go on line 10400. They come in box 127. There's some supplementary unemployment benefit plans. It's an extra plan that your employer offers in case you lose your job for a period of time or need to be off work for a period of time. That goes on line 10400. It's in box 152 on the T4A. You do not need to memorize these box numbers. Please don't try to memorize the box numbers. You'll get very stressed. There are going to be a lot of them, and every slip has different box numbers. So more importantly, make sure you know how to look them up and make sure you know how to read the directions. So if it says box 118, you're going to notice it says report on line 10400. That needs to go on line 10400. That's the part you have to be able to do. I do not have all of these memorized. I have to look them up still because there are too many tax slips to memorize everything. Okay, so mostly be aware we're going to keep adding new types of boxes to different tax slips. Every tax slip you have, there is a legend somewhere that tells you what to do with it. The two other types of income that you would see on a T4A that we're not going to cover in this course is box 20 and box 48. So box 20 is self-employed commissions. Box 48 is fees for services. If you see a taxpayer with those box numbers, they need to be filing a business return, and that is beyond the scope of this course. So if you're working in an H&R Block office and someone brings you a T4A with any dollar amount in a box 20 or a box 48, it needs to go to a specialist. Okay, that happens. The most common one that's really frustrating is with people who do a side job as acting. So there'll be an extra on a set for a day, and they will get a T4A for like $100 with a box 48, and all of a sudden now we have to do a business statement for them. And it's a real pain, and that is where you go find a senior associate to help out. Okay, good. Questions about T4s, about T4As? I know we're going quickly, but I'm expecting you to have done this already. So I'm going to get into the next difficult thing for today. We're going to spend a bit of time on that, and then we're going to fly through to the end of class. We're going to talk about wage loss replacement plans. So group sickness or group accident insurance plans. We say in tax wage loss replacement plans as a source of income. If you say that to a taxpayer or a client, they're not going to know what you're talking about. We're talking about disability income. Specifically in this case, disability income that is paid by an employer or by a plan that is connected to the employer, because there's lots of types of disability income. You can get disability income from workers' compensation. We're going to learn about that later. You can get disability income from Canada Pension Plan. We're going to talk about that later. Taxpayers just call it all disability income. We have to be more specific because it is a different type of disability income. So what we're talking about today is a wage loss replacement plan. Okay? The type of plan it is determines how it shows up on the tax return. If the employee pays for everything, if they pay all the premiums, and then if they have a disability, they get income from that disability plan, that income is not taxable and not reportable. They will not get a slip, and it does not have to be reported on income anywhere. So you might have a client who comes to you and they bring you their tax slips and they don't really have any tax slips. And you know that they've been paying rent all year. You're going to say, how did you pay your rent? And they go, oh, I was on disability. You're going to ask them to check the disability. Was it from an employer? They're going to say yes. I'm going to say, is it a plan that's paid for just by you, or does the employer contribute? They're going to find out it's just paid for by me. It's not taxable. So their income is going to be zero. Okay. On the other hand, it's possible that the employer contributes some or all of the amount going in to pay for the disability plan. Okay. In that case, it is taxable. So if the employer is exercising control over the plan and the employer is contributing to the plan, you will get one of two slips if you are on disability. So when you go on disability, you're going to get income. You might go on disability for a short part of the year. You might go on disability for a long time. If you're getting income and your employer is exercising control, if they're contributing to the plan, either partly or fully, you might get a T4 with a box 14, or you might get T4A with a box 107. Either one is possible. You won't get both. It'll be one or the other. Okay? If the employer is the only person contributing to the plan, then all the money from that plan is taxable. All their disability income is taxable. But if the employee is also contributing, they get to deduct a portion of what they contributed, because what they contributed isn't taxable. And that's where our job gets complicated, because first of all, we have to identify, A, that they had disability income, B, what type of disability income it was, and C, if they contributed, how much did they contribute, because we can deduct it. How we deduct it is different depending on the slip that we get. If we get a T4A with a box 107, and there's a portion we can deduct because it's what the employee contributed, we only need to report the taxable amount on line 104.0. So we just take the total from the slip, we take the amount in box 107, we subtract what the employee contributed, and whatever's left over, that's the number we write on line 104.0, and then we're done. That's it. Okay? It's more complicated if it's reported on a T4 in a box 14. A T4 in a box 14, normally we just take that number and it goes on line 101 of the tax return, and that's it. It sits there. We don't touch it. It has to match the slips. In this one circumstance, we're going to find out how much the employee contributed. We're going to deduct it. So we're going to reduce the amount we're writing on line 101.00. But then the government's going to say, well, that doesn't match what I have. So we need to tell them that we have reduced it because of a wage loss replacement plan. So in that case, we're going to go to the tax return. I'm going to pull up my tax return here. You're going to see a reporting number in line 10130. Remember, the reporting numbers are not affecting the tax return. We're not adding to income. We're just telling the government this is the type of income it was. So now the government will look at the box 14 on the tax slips. It will notice that it doesn't match, and it's going to say, oh, there's a wage loss replacement contribution. That's why it doesn't match, and then they will accept the difference. So if it's a box 14, you need two numbers. If the employee contributed, you need to reduce the amount in 10100 and put that a reduction on line 10130. If it's on a T4A, don't touch anything else on the return. Find out how much is taxable. Put the taxable amount only on line 10400, and there are no reporting numbers. It's just the only number. Okay, we're going to practice this. So let me switch back to the slides. Okay, I have already explained all of this. You're going to get this in your slides. You can't reduce the taxable income by more than the income you got. So maybe you've paid into a plan for years and years and years. You put $1,000 a year in for 10 years, but you've only used $2. You can only deduct up to the taxable income that you got. So look at your disability income as the maximum, and that's the most you can deduct. And then the rest of it you carry forward to a future year. So if you need to go on disability again, you can use the contributions that you haven't already deducted. Okay. If you have that, you need a letter from the employer that says how much you paid. It's not going to come on a tax slip. You have to go get that information. It's not possible to find it anywhere. The client will not know the answer. Most of the time, they don't even know that they were paying. So the first question you want to ask is, were you on disability income at all during the year? Because if you were on disability income, now we're going to go and do some homework. We're going to send them back to their employer and get some information. If none of their income is from disability, we don't have to worry about it. But we do need to ask and do some investigating, because if you don't investigate, you might not know that there was disability income, and you might not know that there were contributions you could deduct. So we have to go find the information. Okay, let's try this out. So we're going to use John as an example, and I'm going to give you multiple years because he's had a couple of years, so we can practice tracking it through. So he puts $200 a year in every year, and he started in 2010. So in 2010, he put $200 a year to a company wage loss replacement plan. So this is a disability plan that he is contributing in part to, and the employer is also contributing to or controlling. Okay, so put 200 in 2010. In 2011, he put another 200 in, but in 2011, he had to go on disability briefly. And when he did, the employer gave him a box 107. Can someone tell me, in 2011, how much taxable income am I going to report, and what line number will I put it on? So I want a taxable income number and a line number. Okay, so he has contributed for 2 years, and he has received some income. How much taxable income and what line number? I'm seeing a couple of people saying $100. I agree it's $100 of taxable income. $500 was taxable because it's disability income, but he can deduct his contributions. He made 2 contributions of 200. So it's 500 minus 200 minus 200, which leaves me with 100. And because it's box 107 on a T4A, I'm going to put it on line 10400, and that's all I'm going to do. No reporting number, no anything. Good. Now we start again, because 2011 we used up all his contributions. He no longer has contributions. 2012 he put money in. 2013 he put money in. 2014 he put money in. 2015 he received $200 again in disability. So how much taxable income will I report on his return in 2015? Okay, I've got a couple people. If you haven't tried it, this is good practice. So I want to see many, many names on my chat window there. Everyone is saying 0, and I agree with you. It is 0 because He put 200 in, he put more than 200 in. He took 200 out, none of it is taxable. Now, the CRA knows that he has a T4A. They're probably going to write him a letter and say, why didn't you report your income? And you're going to say, because I have this very helpful letter from my employer that says I made contributions to a wage loss replacement program, and they will allow him to not report the income because it's not taxable. Excellent. Then we're going to get to 2021. This time he was on disability for longer. He received 2,100. This one's tricky because we have to keep track of which contributions have been used and which ones haven't. I'm going to give you guys a chance to try it, but I'm going to give you my chart at the same time. What does he have to report on line 10400 in 2021? How many years of contributions do we have to work with? So 2010, 2011, those contributions got used. 2012, those contributions got used in 2015. 13, 14, 15, 16, 17, 18, 19, 20, 21. How many more years is that times 200? Is he going to have taxable income or zero? It's going to have a bit. And it's going to go on line 10400. Excellent. I like to make a chart. This is what my chart would look like because you have to keep track of this for every year and you have to help your client. This client in particular, because it's happened for multiple years, you're going to make sure he's keeping track because it's hard if he's never been your client before and he comes to you in 2021. You can't just look at what's happening this year. You have to go back and say, in the last however many years of contributions, have you had disability income? You have to factor it in. So we know that he had no carry forwards. We're just carrying it through. You should have ended up with 300, I believe, is the correct answer, because we had 1,800 available contributions that we haven't deducted in previous years. It's 2,100 minus 1,800. 300 goes on line 10400 of the tax return. What would be different if this had been reported on a T4? So if on a T4, let's say his income on the T4, I'm going to make this a little bit easy for you. T4 box 14 said 52,100. If he had a T4 with box 14 with 52,100, what would we write on line 10100, and what else would we need to put on the return? And you will need a calculator for this. At least I need a calculator for this. So if that was what we had, we can deduct the contributions that he made. So we're going to take 52,100. We're going to subtract 1,800, which gives us, I think, 50,300, something like that. 50,300 will go on line 10100. And what else do I need to do? I need a reporting number. What reporting number will I have? I have to report what I deducted. I have to say what I took away. So the contribution goes on line 10130 and it has to be 1,800. And we're going to subtract the 1,800 because that's how much money he put into the plan. The portion he put into the plan, he doesn't have to pay tax on. He only has to pay tax on the money that he didn't contribute to the plan. So that's money that the employer put in, or it's pooled money from other employees. The extra money is taxable, but the amount that he contributed is not. If you want more practice in this, send me an email and I will send you more practice. All right, and Helene asks, 1,800 comes off the T4. Yes, we will reduce the T4 box 14 by 1,800, and then we're going to say on line 10130, I reduced it by 1,800, so the CRA will know what we did. All right, I have one more question for you. We're going to do a poll just to see if you're really, really thinking about this. I'm going to give you 2 minutes for this poll, and then when we finish the poll, we're going to take our second break, and then we're going to finish very quickly. So let's try this. You should now have a poll on your screen. Okay. And the poll is going to say, Your client has given you their T4 for the year. It shows an amount of $38,000 in box 14. Pick which statement is true. Statement A, I can tell from looking at the T4 that my client was on disability for part of the year. Is that true? Statement B, I can't tell from the T4 whether my client was on disability for part of the year. I have to ask them, or I might be over-reporting their income on the tax return. Statement C, if my client was on disability, I will always get a T4A with an amount in box 107, but I still need to find out how much my client contributed so I can deduct that amount from the income reported. Or D, if my client was on disability last year, the employer would only report the taxable portion in box 14, so I don't need to do anything. Which of those do you think is true? Okay, it's a difficult question, but I really want you to think about it. And when you have your answer, I want you to hit the submit button. Okay. Test each statement before you answer. Okay, and I'm getting pretty good participation, but I want to see a few more people locking in an answer there. You've got 30 seconds left. These are good things to practice, even if you get the wrong answer. That's how you learn. Okay, 20 seconds left. A couple more people are making their choices. Wonderful. That's what I like to see. A couple more. 10 seconds left. When you think you have the answer, hit the submit button. And we're going to count down 3, 2, 1. And let's take a look at the results together. It's just tabulating for me. We do have a mix, but I think you guys did pretty well on this one. Down here. One more second. All right, let's share the poll. So what we can see is most of you said that the correct answer is B. I can't tell from the T4 whether my client was on disability for part of the year. I have to ask them. If that is what you picked, you are correct. Okay? So if the client is on disability and they're reporting it on a T4 or a T4A, however they report it, the employer will report all of the income as taxable. We have to find out if there were any employee contributions that we can deduct. It is our requirement. So whether it's a T4 or a T4A, we have to find out what to deduct. So answer D is not true. Answer A is not true. On a T4, box 14 looks the same as all the other box 14 income. So you can't tell whether they earn that income by going into the office and doing work or by being on disability and receiving disability income. You have to ask if it's on a T4. If it's a T4A box 107, you know that they had disability income, but you still don't know how much you can deduct, so you have to find out. But if it's on a T4, there's no way to tell if you don't ask. So this is one place where a lot of people might miss deductions that their clients are entitled to. Your client will not know to ask for this, and the employer won't give it to them unless you ask for it. So if you have a T4, ask the client, were you on disability last year at any point in the year? If they say no, you're good to go. If they say yes, you can go find out whether or not you can give them a deduction and take some taxable income off their return. All right, let's take a break there because that's been a long day, and then we've got a little bit more to do. So it is 11:37. We're going to come back at 11:42. All right, welcome back from break. We're going to go very quickly. We've got about 15 minutes or so left, so we're going to see how much of the rest of this chapter we can do today. Probably not going to do the review problems today, which means we'll do them at the beginning of next class, so you have a bit more time if you're not done. Make sure you're using fillable forms for that. Let's jump into the last type of major type of income I want to talk about, which today is research grants. I'm going to do this very briefly because we're going to come back to this when we do student income. So just to give you an idea, one type of other income, when I say other employment income, I'm talking about line 10400 on the tax return, comes on a T4A slip in a box 104, and it is a research grant. So if you are hired to do research either from a university or a college or maybe from another organization, they'll issue you a T4A with a Box 104. In that case, you're allowed to deduct your expenses that are related to your research. So anything that you need to spend money on in order to do the research. That might be rent, it might be salary, it might be supplies, it might be chemicals, depends what you're researching, might be travel costs. You have to have your receipts because you have to be able to prove your expenses. And what you do is you only report the taxable portion. So the taxable portion is your total income. It's what's in Box 104 minus your expenses, and it can't be negative. So you can go down to zero, but not past zero. And that's what you're going to put. You're going to put the next number on line 10400. It is important to make sure that you're not trying to claim personal expenses through here. These get audited frequently, so you want to make sure, A, that your client has receipts, and B, that you're confident that the receipts are connected to the research. You want to connect the expenses to the income for the year, so expenses and income will be connected to each other. All right. Says take a short break. We did that already. I'm going to go very quickly through the last slip you're going to see today, which is a T4PS. This is a profit sharing slip. There are some employers who will pay some of their profits from their business to their employees, even if the employees are not shareholders, because they have a profit sharing plan. It's not super common, but it does exist in some circumstances, so you will occasionally see them. And it comes on a slip called a T4PS. You're going to do the same thing you do with every slip. You're going to read the box numbers, and you're going to put the box numbers where the box numbers say. We're going to come back and look at the slip in more detail when we get to investment income, because a lot of times this will include dividend income or capital gains. But most importantly, you're going to find a box 35, other employment income. So for the purposes of today, other employment income goes on the other employment income line. Other employment income is 10400, and if you don't know which box number goes where, you're going to read the second page of the tax slip, and it will tell you that. You can find this in your tax reference book. You can find this on the CRA website. We'll come back to it. There are special rules for specified employees. All of this we're going to go into more detail later, so I'm not going to do more on it today. All right, you have finished the first page of the tax return. You are going to total all the lines on the right side of the page up. Remember, we have reporting lines on the left side. They don't get added into income. We're just going to add everything on the right side of the page. So if I go back to my tax return here, I'm going to take the numbers on line 10100, which you now know how to put in, plus the number on line 10400. I haven't taught you any other lines, so you're probably not going to use them right now. You're going to total everything on the right side of the page up on line 19. It says add lines 1 to 18. Follow the directions and you'll do well. We'll be learning about other types of income. Self-employment's not going to be in this course, so you're always going to put 0 on line 25. Add lines 19 and 25. We will be learning about compensation benefits and social assistance and things later, but for today, those are going to be 0. And you get total income figure on line 15000. That goes down to the next page, so line 31 and line 32 always look the same. And then we get to start talking about deductions. So that's what I'm going to do for the last part of the course today. Deductions are reducing your net income and possibly reducing your taxable income. So if you're reducing your net income, we're going to be paying less tax. Deductions are really nice. We take the money off before we calculate tax. Okay, so that's what the net income section at step 3 looks like. Remember, these are the 200 numbers, and we're going to learn how to do a few of them today, and we will be coming back to the tax return, so I'll show you that. The first one is RPP contributions. RPP contributions, registered pension plan. This is a pension plan that your employer sets up for you. So as an employee, you pay into a pension plan through your employer. This is not to be confused with RRSPs. RRSPs, sometimes your employer helps you put money in an RRSP, but it's your money that's going in there. RPP is a pension from your employer. Okay. We also have in Manitoba what's called a PRPP. I'll talk about that in the next slide briefly. But for now, registered pension plan. Sometimes you contribute on your own. Sometimes you contribute and your employer contributes, so there may be a sharing portion. You have different box numbers. On a T4, what you've contributed this year goes on box 20 and it gets deducted on your tax return. So you don't have to pay tax on the money that you put into your registered pension plan. There are some special rules for past service contributions. Mostly what I'm going to say for that is it will tell you on the box number what to do with it. You'll have a box 74 or a box 75. It's already included in box 20. The box 20 goes on the return, and then there are some special rules if you have a box 74 or 75. We'll deal with that when we get to it later. For now, we're just going to do current contributions. And then you have a pension adjustment. The pension adjustment is a reporting number. So box 52 of the slip does not go on the tax return as a deduction, but it does need to be reported to the government. They use that for other purposes. We'll learn more about that when we talk about Schedule 7, which is dealing with RRSP limits. So you're going to notice if you have a pension plan, that goes on box 20 of the T4 slip. It tells you on the form what to do. Box 20 of a T4 slip or box 32 of a T4A goes on line 20700. And if you have a box 52 on a T4 or a box 34 on a T4A, that's a reporting number. It goes on the left side. Does not affect the calculations, but it needs to be there. Okay? Registered pension plans. Lots of people have them if you have an employer who has set one up. Pooled registered pension plans, I said I would talk about them. They are fairly new. Not every province does them. Manitoba now does. It's a type of registered pension plan where multiple employers can get together and create a pension plan. Maybe they're too small an employer to do it by themselves, but if they get together with a few other employers, they can contribute to a pension plan that way. It's treated more like an RRSP, so we're not going to talk about it until we get to RRSPs, and I teach you how to deal with those. It goes on line 20800, so we'll learn about that there. I haven't seen one yet in Manitoba, so I know they exist. I am prepared for them if they come. I have not yet received a pooled registered pension plan contribution slip, but they exist, so we're telling you. All right, when you are going to have to deal with all the time, this happens frequently, is union dues or professional membership dues. I'm going to start with union dues. It can be reported in one of two places. You might have union dues reported on your T4. We already saw that in box 44. If you have it in box 44, you don't need a receipt. That is your receipt. That just goes on the tax return. You might have a receipt instead. If you have a receipt, you need to identify that it is a union, and then you can put it on the tax return. The tricky thing that happens is if you have a client who's in multiple unions and they pay multiple union dues, they might have a mix. They might have a couple of T4s with some box 44s. They might have a T4 and some receipts. In that case, you have to be careful to make sure that they're not double dipping on what they put on the union dues. So if you have a receipt from a union, maybe it has a couple of different union deductions on it, and you have maybe 2 or 3 employers because they work for different employers. In that case, you're going to have to make sure, don't just add everything together, make sure that you know exactly how much money they actually spent, and that's the figure you're going to put on the return. What are some of the common industries where we expect to see union dues? So nurses are often unionized. Construction is a big one. Construction, electricians, people in the trades, very frequently unionized, very frequently members of multiple unions. So construction, electricians, those kinds of things, they may have 3 or 4 or 5 different unions that they're members of. Those are the tricky ones. Teachers, government employees, nurses, those people will usually just have a T4 with a box 44. They're easy because they're only a member of one union. So if you think you should be seeing a union receipt and you don't have a box 44, ask your client if they're in a union, because if they're in a union, get the receipt, put it on the return. If you see a box 44 and they're a construction worker, maybe ask, are you a member of more than one union? See if there's extra deductions. If you don't ask for a deduction, you don't get one. You have to ask for it. So we should be thinking about who of our clients might qualify. If you have union dues, whether it's a box 44 or a receipt or a mix, find the correct number, put it on line 21200. Remember, it starts with a 2. It's taking income away before we calculate your tax. Okay. Professional dues are trickier. Professional dues, there are people who are members of a professional organization. You can deduct those membership fees if and only if all of these things is true. So the payment has to be required for them to work in their job. They have to be a member to do their job. And that requirement is written down in a law somewhere. So the law says, whether it's a federal law or a provincial law or a foreign law, the law has to say, in order to do this job, you must be a member of this organization. Okay? And the job they're doing has to be related to the membership. So that's easier. Usually you're not a member of a profession if you're not working in that profession. But the really critical thing is it has to be required by law. Can anyone name some things where you have to be a member of an organization to practice? Lawyers. You cannot practice law in Manitoba if you are not a member of the association. By law, you cannot do it. Nursing, another big one. Okay? Have to be careful with some other ones. Let's practice a few together. Let's see if we have time. I'm going to ask for some annotation here. Okay, you have your toolbar at the top there. Put a mark on the left side if you think they can claim the deduction, and a mark on the right side if you think they can't. So they have brought you membership fees. They say, I am paying membership fees to this organization. They want to put it on their tax return. Can they do it? It's a nurse paying membership dues to the College of Registered Nurses, an engineer paying membership fees to the IEEE, Institute of Electronics and Electrical Engineers, and a musician used to practice law, pays membership fees to the Law Society of Manitoba, but they're not currently working as a lawyer. All right, and I have my favorite answers here. Everyone got the last one right. Excellent. If you're not working in that industry, no, it doesn't matter. Even if you're keeping your license up, you can't claim it on the tax return unless you have some income from that. The tricky one is the middle one. Most engineers cannot get hired if they're not a member of saying, you know, they can't call themselves an engineer or be hired as an engineer. However, is there a law on the books that says you can't work as an engineer unless you're a member of this organization? No, there is not. You can be hired as an engineer without paying a membership. Your employer might not let you, but the government will. Accounting is another one. You can't call yourself a CPA unless you're a member of the Chartered Professional Accounting Association. But you can work as an accountant without having any membership in any association. So engineers cannot claim their membership fees. In Manitoba at the moment, the laws might change, but you can work as an engineer without being able to claim your union dues. You don't have to have professional engineering license to work as an engineer. So no. Engineer, no. If you said yes, I want you to change your answer and remind yourself that it is a big no, you can't claim it. They all have them. They will bring you the receipts. There's a receipt sitting in front of you. You cannot put it on the return. How do you find this out? If you don't know, some of them are obvious. So dentists, yes, you can't open up a practice to be a dentist. If you start pulling people's teeth without a license and approval, you'll get in trouble. So some of them are obvious. If they're not obvious, you have to look it up. Most of the websites for the memberships will tell you what benefits you get. They will say you are required because of blah, blah, blah act or blah, blah, blah law. If it says you have to be a member because of the law, yes, use the membership fees. If it doesn't say that, there probably isn't a law. So just really quickly, I had a few other examples here. Accountants, we said no. Dentists, yes. Optometrists, yes. Teachers, can you teach without being a member of a teaching profession? Yes. So private teachers do not have to have teaching degrees. They don't have to be a member of an organization. Public school teachers require it, but there's no law that says to be a teacher you have to have a membership in anything. So teachers cannot claim membership dues. Union dues, absolutely. If they're in a union, go ahead. Membership dues, no for teachers. And then pharmacists, can you sell drugs to people without legally being allowed to because of law stuff? No, not legally. So pharmacists have to be licensed. Their membership dues will be yes. And again, if you don't know, look it up. Okay. We have 2 minutes left. Let's see what I can do in 2 minutes. Other employment expenses, you might have to repay some employment income. If you have to repay some employment income, you've received employment or other employment income in the past, you have to pay it back. You get a deduction on line 22900, but you have to have a letter or receipt. The big one we're going to see for there is probably going to be COVID benefit related, but other ones might be, for example, what if you were disabled while you were at work, you were receiving money from a plan because your employer was covering you, but it turns out that actually you should have been on workers' comp. If you are now getting workers' comp and repaying what you originally paid, you'll get a deduction for that. So there are times we will have that. It goes on line 22900, and you need a letter. I think that's all we're going to do today. So that will get us right to the end of net income. Net income is pretty much the last spot we're going to get to. We're going to finish to get to the end of taxable income for next class. So we're going to be doing a couple of deductions there, and we'll do the review problems next class. But we are almost done this chapter. Again, if you want extra practice on wage loss replacement plans or on T1135s, send me an email. I'll make sure you have my email. I'm going to stop sharing my screen so you have it there. Okay, and I'll be happy to send you extra practice. You have to send me your attempt at it to get the answer. Okay, and then for next class, should be Wednesday's class, read Chapter 3, complete the review problems. We're going to finish Chapter 2. We're not going to finish all of Chapter 3. I can tell you up front, we're not going to finish. I've never finished Chapter 3 in one class, but I'm going to do my best to get you through it, and we'll do the review problems as well. That's what we're doing. And then for next week, you're going to be doing a self-test, which is not marked, but you should try it. It will test whether or not you know your stuff up till now and what you need to work on. And then we're doing Chapter 4 and the review problems. All right, and that's it for today. So have a really good day. I'm going to start by sharing my screen, and there probably won't be anything on it in a moment because I want to pull these windows out and make sure we're starting in the right place. So remember, we're just finishing off the end of Chapter 2. We only had a few slides left to go because we had just gotten to, if I remember correctly, oh, that's not what I wanted to do. That's what I wanted to do. If I remember correctly, we had just finished getting to net income. So, everyone agree with me that we're in the same spot? Getting my computer screen to cooperate with me here is going to take a second. There's one. Nope, that's not what I wanted it to do. There you go. Let's see if I can make this bigger. I think one of the instructors has been playing with my screen settings. I can fix it. Here, how does that look? Everything look all right? Perfect. So we did get to the end of the net income. The next thing we're going to do is a few more deductions. We're going to talk about what we need to do to get the taxable income. And just to see if everyone's awake, give me a reminder, what do we use the net income figure for on a tax return? Why do we need the net income? It's not what we use to calculate tax. What do we use it to calculate? For credits. Good. And in this case, mostly benefits, but also some of the credits on the tax return that are related to family net income or personal net income. So as we start getting into chapters 3 and 4, you're going to start to see us referring back to that net income number a little bit. So after that, we still have a few things that we need to add for when we're doing net income calculations, but remove before we calculate tax, and that's what we're going to do today, and that is that step 4 of your tax return is where you're going to find it. These are still deductions, so we're still looking at numbers to start with 2. And the first one that I want to talk about is the Canadian Forces Personnel and Police deduction. So there is a deduction for people who are working in these particular careers in some circumstances. So not everyone in Canadian Forces will have these on their tax slips. Not everyone in the police will have them. But generally, if there are missions overseas or there are high-risk missions, and it is up to the employer to determine what qualifies, there will be a portion of their income that is not taxable. Income will be included in box 14, so it will go into income and it will go into net income, but then there will be a box 43, which will have a deduction. If you're curious about how much that deduction is, there is more information in the textbook. Generally, it's the smaller number of what they actually earned while they were on the dangerous mission, or up to a maximum, and the maximum is determined again by the employer. Right now it's somewhere close to $6,000 per month, and so it'll be whichever of those numbers is smaller, and they can then claim that deduction. They put it on line 24400. That income will be included in net income, but will not be included when we're calculating tax. Okay, the easy answer is if you see a box 43, take the box number from the slip and put it on the tax return. If you do that, you are doing the right thing. All right, and the other one we're going to look at today is the security options deductions. So security options is really a fancy way of saying that sometimes an employer will give their employees the opportunity to buy some shares in the company that they work for, to buy some stocks in that company. And even better, they don't have to buy it at the current market rate. So normally, if I wanted to go out and I wanted to buy a share of Google or a share of H&R Block, if it's being publicly traded, whichever company I want to own a little piece of, I have to go to the market and see what people are willing to sell it for, and then that's the price that I have to buy it at. That's called the fair market value, the FMV. So what happens with security options deductions is an employer will say, because you're our employee, we're going to let you buy this for a less expensive price. So they will give you a discount on those shares, and you can pay less money up front. That's good for you because you can buy the shares now at a lower price, and hopefully, whenever you want to sell them, and usually the company, if it's privately controlled, will give you the option to sell later on. If it's publicly controlled, you may be able to sell them at your convenience. But what will happen is later on when you sell them, you're going to hopefully make a profit because you bought it at a discount, and then hopefully the company will continue to do better and will do even more, and that value will keep going up until you sell it. The problem for the government is that they want to make sure that they get your money. So normally they don't get to collect income from capital gains, which is when you sell things, until you actually sell them. But you've already benefited because you got a discounted price. So they want to tax you on that discount up front. They want to tax you right away. So what they do is they include in income the difference between the current market value of those shares and what you paid for them. So that discounted amount you have to pay as income up front because they're not going to wait for it. That is going to be reported in a box 38. So the employer decides how much the value of that discount is, and they report it in box 38. You don't need to do anything with that because it's already included in box 14. The important thing, though, is that you will learn later in the course capital gains are only taxed right now in Canada at 50%, not at 100%. So if they include all of the discount up front, that's not fair to the employee because they're paying 100% tax now, and they wouldn't get credit for it later. So to make it fair, you also are allowed to deduct 50% of that income now, so that at the end of the day, hopefully it all works out to everyone being taxed what they're supposed to be taxed, but the government gets the money up front for the security option. So again, if you want to understand how it works, there's examples in the book for how that works, and we've had this explanation here. But really what you need to know for this course is if you see a box 38, you know that the client has exercised the security option. They may not understand what that means. If they ask you questions about it, make sure you can explain it to them, what it is that happened and why it's on their tax return, why their income number looks higher than the money they got in their bank account from their employer, from their salary. And then if you see a box 39 or you see a box 41, make sure you claim the deduction on the deduction line, which in this case is 24900. Give the client the deduction. If you don't ask for a deduction, the government won't give it to you. So we can take 50% of tax off. Any questions about that? Nope. Okay. So we're going to be looking at more deduction lines coming off net income later in the course. We're going to be looking at more deduction lines coming off of taxable income later on in the course. But for today, with what you do know, you can get all the way down to step 4, calculate the taxable income by adding all those deductions up. And that's going to give you the number that you're going to use to calculate tax. And we've done that in our review problems. So the next thing we're going to do is we're going to look at those Chapter 2 review problems. So for this, I'm going to pull my Inkling up and make sure I'm in the correct chapter because I jumped ahead when I was doing my work this morning to Chapter 3. So let's find the Chapter 2 review problems together. You can get yours opened up and you should have your answers. So I'd like you to open up your answers as well. I'm not going to give you the full answer, so I'm going to tell you if you use tax software to do this problem, if you had access to some tax software, you should not be doing that. You will definitely get the wrong answer because I haven't taught you all the lines yet. And so we're only testing you on specific lines, and I'm only going to show you the answer for those lines. Towards the end of the course, if you want extra practice, when you've learned how to do the full tax return, you'll be able to come back to these early chapter review problems and try the whole return at that point. But for today, we're just looking at the specific lines. I always like to go through very quickly on my own and decide what I want the tax return to look like before I create it. So I'm looking for any things I have to watch out for. So we have Aaron, I have a SIN number, I have a date of birth. Remember to look at the date of birth because sometimes the age affects the tax return. We'll learn that in Chapter 3. He is single, we have an address. You're going to see that it's going to say your city, or YP stands for your province, and the phone number is going to be missing an area code. We would like for you to convert everything to where you are. So if you're currently in Manitoba, if you're in Winnipeg, you're going to say your city is Winnipeg. If you're in Brandon, you're going to say your city is Brandon. The idea being you want the tax returns to make sense for the place where you are most likely to be doing tax returns. And I'm also going to ask everyone who is putting in a postal code to take that first number of the postal code, whatever's in the textbook, and change it to a postal code that makes sense for your province. So in Manitoba, our postal codes will start with an R. Keep the rest of the postal code the same. So if I'm going to see this one, Aaron Smith, I'm going to say Aaron Smith lives on King Street South in Winnipeg, Manitoba at R60927. We're going to get into this habit because we're going to use this practice for the whole course. We're also going to do this for assignments and for exams. Okay. And then again, phone number, I'm going to pick an area code that makes sense. That might be 431. It might be 204 for Manitoba. And then we have an email address. Just because we have something doesn't mean it needs to go on the tax return, so be careful about that. We have a note, Aaron Smith does not want to sign up for online mail, so I need to remember that. I've put a highlight on it so that when I'm doing my case, I can double check to make sure I didn't sign my client up for something that he doesn't want. All right, he works for a construction company, and he tells us he was off work for a month because of an illness, and some of that was disability income. So we then got a letter from his employer saying that he received $2,000 in benefits. It was included on his T4, and we know that he's contributed $12,000. So we know we can deduct $12,000 from the tax return because that's the portion he contributed and it's not taxable. So I've made a note that there's a $12,000 deduction. I want to factor that in when I'm doing the return. Then we have some odd jobs. Does he have to include the income from the odd jobs? What does everyone think? Absolutely he does. In this case, we told you that it's an odd job, so you know it's going to go on other employment income. In real life, you're going to say, what else did you do last year? And he's going to say, oh, well, I decided to do a little bit of extra work for this other company. That was kind of fun. I just did a few days here and there. And you say, oh, did you earn any money when you did that? He's going to say, oh, yeah, a little bit, but, I didn't get a tax slip. Then you have to explain to the client, even without a tax slip, he has to tell you how much it was and what he was doing. You have to decide, was he an independent contractor, all of those things. And then you go, yeah, that sounds like an odd job to me. I'm going to put that on the tax return. Then you're going to tell him why so that he can keep records the next time he does it. All right, and so I put a highlight. I want that on the return. And we have a $5,000 winning from a lottery ticket. Do we need to include the winnings from the lottery ticket? No. So in my world, when I print things out on paper, because I'm still very old school, I would put a line through that 5,000. So if I see a number in a case, when I'm finished, I'm going to go back and I'm going to say, did I do it or did I not do it? I'm going to put a line so I know that's not going on the return. All right, he's a Canadian citizen, but he doesn't want to sign up for Elections Canada. Again, I'm going to highlight that so that when I finish the return, I check to make sure I didn't sign him up for anything. And then we know that he inherited $150,000 from his late Uncle Charles, which he used to buy a piece of land. What does he have to do now that we know he owns a piece of land in Florida that was worth 150,000 Canadian dollars? We have to file a T1135. So make sure that you've made a note and you're filing a T1135. And in this case, we know it's not a personal use property because it's just a piece of land. If he builds something on it, then and doesn't sell it, doesn't want it to be an investment property. If he's like, I want a home in Florida someday, it might become personal use. But for now, it's an investment, and therefore it has to be on that T1135. Good. Then I'm going to go to the tax slip, and again, I would go through and just make a note of any number that I want to put on the return. So you've learned how to put box 14 on the return. We haven't done CPP or EI yet, so we're not going to cover that for this case. We haven't done tax deducted yet, but we have done union dues, so make sure you circle those union dues and that they show up. And don't forget to look in the bottom to see if there's anything else that has to go on the tax return. We do have a box 40. Do I need to put the box 40 anywhere on the return? No. It's already included in box 14, so I don't need to do anything with that. I would cross that one out again, just so that I know that I saw it and that I thought about it, and that's why it's not on the return. Okay, so now we're going to complete his return. I'm going to open that because I already have it done. You should be using fillable forms. Class, there we go. Fillable forms, Aaron, tax return, open with Adobe. Give my computer a minute to think about that. And here we have Aaron Smith. And let me see if I can make this bigger for you. So I have Aaron Smith. I have a mailing address. I have Winnipeg, Manitoba. I have a postal code. I do not have an email address. Do not put an email address. He doesn't want one. Social insurance number, date of birth, and he's single. And I have English. Everything else is blank. Province of territory. If you did not do this, go back and fix it. Make sure you have told the government that he's filing Manitoba tax returns. So there's Manitoba, and then these two will always be blank, and this part will always be blank for this course. And because he's single, we don't need to fill out a spouse or common law partner. That should also be blank. We're going to say yes, citizenship, no, doesn't want to sign up for Elections Canada, and yes for a T1135. Now, as soon as I hit that yes, I go and fill out a T1135. That's how I handle things. I like to do my tax returns in order from top to bottom. I start at the top, I work my way down, and as soon as I hit a line that needs something else, I stop what I'm doing, I go finish that thing, and then I come back. And that way I don't miss things. You're going to find a process that works for you. As long as it's organized, it's fine. The goal, however, when you're doing paper returns is not to do too much that's going to need to be recalculated. So again, working from top to bottom, you're going to find that you don't have to keep coming back and calculating those lines after you add things in. So that's my recommendation. But like I said, you're going to find as you practice this what works for you. So here's my T1135. You're going to notice if you're saving these for whatever reason, these are very old PDFs, sometimes that individual box kind of disappears even though you did click it and you saved it. If that happens for something that is being marked that I have to look at, I will give you the benefit of the doubt and say that you clicked individual. That's just the only box that does that for. So I'm going to put it back in. This should be individual Aaron Smith, social insurance number. Individual code 2 is important because you don't want to tell the government that he's self-employed. If you tell them he's self-employed, they're going to go look at his tax return and try to find his self-employment income. And now you've created a little bit of a headache for your client. All right, we've got an address in with a postal code and a country. We have a year. The taxation year is critical. If you don't have a taxation year, the CRA will not accept your T1135. And if it is then late, that could create some penalties for your client. So make sure you have a year. And in this case, between $100,000 and $250,000, I'm going to use the simplified method. So I'm going to say total cost is between those numbers. We're going to do simplified. What does he own? It's a piece of land. So I'm going to pick real property, yes. What country is it in? United States. Always ask at this point if he has any other foreign property just in case, but he doesn't in this one. And then we need the income. So right now, the land is not being rented for anything. He's not using the land to earn any money. It's not giving him dividends or interest. It can't do that. It's land. So we have no income for this year, and he hasn't sold it or even a piece of it, and so there's no gain or loss. So we're going to put zeros on both of those lines, and then we're done. Make sure your client signs it, e-file it, T1135 is in, and we've just saved our client potentially $2,500 from doing that. Do I need to put anything about the land on the tax return? So I have to put the land on the T1135. Do I need to put it on the tax return? What does everyone think? No. Nothing has happened that results in anything going. He inherited it, so when he originally got it, that money, that didn't have to get reported on a tax return. Nothing will happen with this land until the land earns him money. When the land earns him money, then we need to put it on the tax return. Good. So now that I've finished my T1135, I'm confident nothing needs to go from it onto the tax return. I can keep going. All right. So I have employment income of $46,927. Now you're going to notice that that is different than box 14 because what did I do? I took the box 14 number and then I remembered the wage loss replacement plan. Wage loss replacement plan, I can deduct the portion that he contributed. I can take $1,200 off. So if you take $1,200 off, you should get $46,927. Because I took the money off the first line of the tax return, I have to explain myself. So I'm going to say, here we go on line 10130. That needs to say why the number is different from the slip that the CRA has on file. And then I have my odd jobs. And that's all I've taught you how to do on this page. So we're going to add the columns on the right. We're going to add lines 1 and 2. We're going to bring it down to line 19. We're not doing self-employment income, so it's going to be repeated on line 26. I haven't taught you how to do social assistance, so it's going to be repeated on line 31. And we have a total income figure. Then we're going to go down here and put the same number at the top of the next page. Don't forget your union dues. He had union dues from a T4 of $685. We can deduct the union dues. It's the only deduction that's relevant for him. So we're going to add all of these lines up together, and that goes on line 51. I can subtract that. It's going to give me net income before adjustments. I haven't taught you how to do social benefits, so that's going to be 0 for now. and we have a net income of $46,542. He did not have any additional deductions, so his net income and taxable income will be the same, and we are done. There you go, Chapter 2. Are there any questions about this case? Make sure you can explain to your client about the odd jobs. That's important. Make sure you can explain to your client the importance of that T1135. All right. On we go. And we're going to look at the next one, which is Serge Caron-Beaulieu. Serge is married to Jamie. Jamie's net income was $30,000. So we know the net income. Jamie's probably already filed a tax return. We can take that number from Jamie's tax return. Serge recently signed up for my account and wants to register. So now I'm going to highlight this one because I want to make sure it does go on the tax return. Okay, we have a hairdresser and cosmetologist where this is a service industry. In real life, you're going to see a service industry person and you're going to ask them about tips because not everyone will tell you because not everyone knows that they are taxable. We've asked him and he says, yep, I keep a log of my tips and I made $12,500. Sorry, my highlight is not cooperating, so there we go. He does not want to put his tips on the tax return. He's like, that's a lot of money. I don't think I should have to pay tax on it. How would you explain to him why he needs to do that? What advice would you give the client to convince him that he does need to put the tips on the tax return? He's adamant. He's like, nope, it's too much money. I don't think I should have to pay tax on it. Can I get a volunteer in the chat window? Helen, yes, first it's illegal. Okay, do not fraudulently underreport your income. You can get in trouble. Now, the next thing he's going to say, well, how will the CRA know? They're not going to catch me. How would they know? How does the CRA know that he has tips? Because they will investigate. They know he's in a service industry. They know that everyone in his job has tips. They will investigate. And when they investigate, what will they do? They're not going to throw him in jail right away. What will they do first? Very rare that they'll throw a hairdresser in jail for this. They're going to add a number that they like. They're going to pick a number that they think is the right number, and then they're going to add it, and then they're going to charge him interest and penalties for not reporting it himself. And they're going to go back and do that for every year that they think they can catch him on. How many years back can they go? 6 to ask for records, but how many years can you adjust the tax return for? 10. So if he's been a hairdresser for 10 years and he's never reported tips for 10 years, and this is the year that he gets audited, that can be a very expensive bill of extra income and interest and penalties. Okay, so you want to make sure that you're explaining to your clients, the CRA knows you get tips. You have to put tips on your return, and they have to be accurate tips because they actually send investigators out to different businesses to find out how much hairdressers in Winnipeg make in tips in a year, how much hairdressers in high-end salons make, how much hairdressers in low-end salons make. They do investigate this. They spend time and money doing it because they know that they can collect the tax that they should be collecting. And also, it does not hurt to tell your clients that they should not file fraudulent returns. And yes, you absolutely do need to report this. Now, if you keep your records and he has records, then what he puts on the return is all that he will be taxed on. They will not have to add more money to it. So, and Helene, yes, they'll look at credit card records. They'll look at bank statements. There's all kinds of things. When they suspect that people have not been reporting what they should be reporting, they do have investigative powers to go find out. So file an accurate return. There are some advantages, which we'll talk about later, in reporting more income. It can be beneficial to report income on a tax return in some cases, but the main reason is you have to pay tax on it because the law says you have to pay tax on it, and you will get caught, and it's not worth the headache of the penalties and the interest and the reassessments and all of that. Just file your taxes accurately. And then the next thing I would do for a client in real life is I would help him to know what to do for future years so that he doesn't have a big tax bill because of these tips. So what tax strategies, the things you're going to learn before we get to the end of this course, the advice you can give to your clients so that next year, even though he's reporting tips, he can protect that money. He can have more tax taken off its source. He might want to put some money in RRSPs. He might want to take a look at what he's doing with his investments and put money into tax-free savings accounts in the future. There are things that he can do so that these tips are actually going to be beneficial to him in the long run, and he's not going to have large tax bills. So we're going to give him that advice as well. All right, so that's my long, complicated instruction, but you are going to have this conversation with actual clients, so it is good to practice. I recommend if you have family and friends and you want to talk their ear off about taxes, my husband is learning all kinds of tax, whether he wants to or not, because I practice things with him at home. Have them be the client, and they can decide how cranky they want Serge to be and see what it is like to actually have that conversation out loud with someone. It's really good practice. All right, so we have the tips. We know that he receives a commission. There's two reasons we know that. One is because it says so in the case, but the main reason is because you have a Box 42. Box 42 is commissions. And he contributes to a pension plan at work. You know that he does that because he has a Box 20 and a Box 52. And we have some bingo. Bingo, don't need to put on the tax return. Put an X through that. All right, we're going to go down here and we're going to make sure we have our Box 14. 16 and 18 I'll be teaching you today. So we'll put a pin in that and come back to it in the future. But we need the Box 20, the Box 52. Circle those, make sure they go onto the return. Check the right side. He does not have union dues. He's not in a hairdresser union. I've never seen a hairdresser union, but maybe there's one out there somewhere. And then make sure at the bottom you don't forget the Box 42. So now that we've decided what's going to go on the return, I'm going to open that return up for you. And here we go. And again, I'll see if I can make this a little bit bigger. So we have Serge. Be careful when you spell his name. It does need to match. He's on 19 River Road. In my case, he's in Winnipeg. If you're not in Winnipeg, he's going to be where you are. Manitoba, postal code starting with R if you're in Manitoba. Email address should now be on, and make sure the email address is correct because that's the one the CRA is going to send his mail to, and you don't really want that one bouncing or him not getting his notifications. So I always have the client double check. If I'm putting an email address on, I make them look at it and go, yes, that is correct. Okay, social insurance number, date of birth. He is married, so we're going to tick married. He wants to communicate in English. And cannot stress this enough, tell the government which province he's paying tax to. He is resident in Manitoba for tax purposes. Good. Then we do need to fill out Jamie's information because he is married. There's a first name, there's a SIN number. Jamie is not self-employed. We're going to leave that box blank, and we have a net income figure of $30,000. That will be used to calculate family credits. Okay. Elections Canada, in this case, we're going to say yes and yes. And foreign property, we can say no, so we don't need to do a T1135 for Serge. Total income, I have $31,759.12. I took that from the T4. Make sure you included your commissions. If you missed anything, it's probably going to be that. So make sure you have that. Even though it doesn't affect the tax return, it does affect his tax situation overall. It changes other numbers for him. So you need to make sure you report it correctly. And we have his tips, $12,500. Is he going to have a refund this year, do you think, or is he going to owe money? Remember, he's had tax deducted off of this portion of his income, but he's had no tax withheld on this. He's probably going to owe. Okay, so again, as we start getting to the end of the tax return, you're going to understand how that works a little bit better. Helene, if he says absolutely no to including the tips, it's going to be a judgment call for you. However, I am not comfortable filing what amounts to a fraudulent return. Considering how much of his income is tips, I would be very uncomfortable with this return, knowing how much his tips are. And of course, it's not doing your client a favor to give them a tax refund that they're not actually entitled to. So it is possible, if you have a return that is not appropriate, to tell that client, I'm not able to file it that way. If you want to file with me, that's perfectly fine. I'm happy to do your tax return, but I have to file an accurate return. I have had that happen. I had a client come in and tell me about a piece of property that they had that had income, and he didn't want to put it on his return when he found out that it had to go on his return. And then he just said, well, what if I hadn't told you about the property? And I said, well, unfortunately you did, and I know about it. And I cannot allow you to file this return. I can't have my name on it for sure, but I can't help you to file this return knowing that you are hiding taxable information from the government. And Saskia, yes, we can get in trouble. We are responsible for filing accurate returns for our clients. Again, to the best of our knowledge and abilities. You'll have scenarios where it's a little bit of a gray area where they don't have a number and you have to come up with a reasonable number. We can't be perfect. But in this case that I had where he told me, I have this property that's earning me money and I'm not going to put it on my return, I would not have been able to file that return. So I told him I wasn't going to file that return, and he was like, well, that's just, I'm very angry with you and I'm going to complain, which is fine. Complained to my manager. My manager said I agreed that she should not have filed that return. And then I put notes in his file on our system because, of course, we have H&R Block offices all over the city. And he left my office and went to a different office and then didn't tell them when they asked him the question about the property. And then they looked in the notes and they went, and what about your property? And he's like, what do you mean? And what about the property that you told one of our associates that you have? And that made it so that not only did I not file an incorrect return for him, no one in our company would file an incorrect return for him because he did disclose that information. So we do protect against fraud. Okay, and then Nancy says, Nancy had a client who hadn't filed for more than 6 years. They wanted to calculate only the years with refunds and not file the other years. That can be problematic because obviously it's not a benefit to the client to have a bunch of returns that give him refunds if the CRA is going to turn around and ask him for him to give all that money back again. Okay, and Saskia, if you do have clients like that that go to a different office, that's why we have programs that talk to other offices, notes that you can put in the file with alerts that say, hey, this is a client who's trying to do something they're not supposed to be doing. Keep an eye out for it. And so those are tools you'll be trained on in an office to make sure that that happens. So we put notes in our files, and those notes go across the country. All right. So yes, convince your clients to file their taxes correctly, and then be diligent about finding deductions and finding credits and giving them good tax planning advice so that they're happy and they're having good tax outcomes. So use your knowledge to do their returns the correct way. If you know your tax return well, you will always get a better result than someone who doesn't know their tax return well. So by the end of this course, my goal is to help you know what to look for and know what questions to ask so that you can help your clients. And Brittany, the liability for your supplier falls on what you know. Yes. If they don't tell you about it and you ask the question, then you can't get in trouble. But if you know the answer, then you can't pretend that you don't know the answer. That's really how this works. We're not perfect. We don't know everything. We have to ask. All right, so just to finish this one, we've added his income together. 44,259.12 is the total income figure. And then net income, make sure you have your pension adjustment. It is a reporting number. It will not affect the tax return, but the government needs to know about it, so make sure that number is on the reporting lines on the left side. And then we have a registered pension plan. That is a deduction. Give him that deduction. If you don't put it on the line, the CRA won't give it to him, even though they know about it. They will very happily allow him to pay a little bit more tax because he didn't ask for the deduction. Okay, so put the $1,500 down. And then we have net income before adjustments is 42,759.12, which is the net income here. And if we keep going down, that is the taxable income as well. Okay. That's it for Chapter 2. We have now done the review problems. It is 9:37. I'm going to give everyone about a 5-minute break, and then I'm going to reset, and we're going to come back and do Chapter 3. So take 5 minutes, and I will see you on the other end of the break.